Good afternoon to all the participants. I again welcome you on Monday of this week. Although it does not matter now whether it is Monday or Sunday these days. And again on 4th with a new extension. So maybe people are still not very happy or smiling, but let us keep on getting ourselves updated and ensuring that we are technically strong enough to face the future with confidence once we get back. So I recognize presence of Regional Council member and immediate past chairperson of WIRC, Preeti Savla. Welcome, madam. I also recognize presence of both the learned faculty, CA Vyomesh Pathak and CA Darshana Jain. Welcome to both of you, and I'm extremely grateful that you have agreed to accept our invitation and spend your time with the participants. So thank you to both of you. Without taking much time, let me now request Preeti madam to give her opening remarks. Madam, over to you.
Thank you, CA Murtuza Kachwala, Secretary of WIRC. As he rightly mentioned, with the extended extended lockdown 3.0, I can say industry 4.0, lockdown 3.0, and practice, we don't know what is the status, but I am sure people are not enjoying, but I am hopeful that in the times to come, we will be corona free India, and our offices will resume, and over a period of next 2-3 months we will be again in the same shape what we were earlier, and there will be more opportunities for us, the way the things are happening, and hopefully if the things are practically being happened as Nitin Gadkari's session yesterday was there at ICI, and if these things are happening, and people are very hopeful and positive after this impact, corona impact, world is actually looking over at India, and India, if the government provides us support for all the support for manufacturing and service provision, our future for CA is also bright, and hopefully, and the first again I welcome the speakers, CA Vyomesh Pathak, CA Darshana Jain. First session will be taken over by Vyomesh Pathak. Vyomesh, being very dear friend, he has contributed a lot to the institute, region and branches as well. And again, he has contributed to a book published by WIRC also, and at various levels. And his contribution is really great. And with the speakers, like all of these Vyomesh, Darshan, and all who have supported us in this quarantine time, we are really thankful to the speakers. And Sabka Vivad Se Vishwas scheme, it has been extended till June. I don't know, again government has to further extend it, this scheme. So let us talk to Satish Kumar Gupta, Principal CCIT 1, who is continuously in touch with us and following up with us कि मैडम कैसे केसेस आ रहे हैं, क्या है, कैसे है. Let us talk, and again very soon we will be starting DTRC also, where we are inviting him to opening for opening our DTRC. So please stay in touch with WRC, watch our sessions regularly so that you are also updated with the sessions what we are bringing. I must compliment the efforts of office bearers, current office bearers, Murtuza Kachwala, for spending their time during this time and sharing the knowledge for all of you, coordinating with the speakers. So thanks a lot, Murtuza Bhai, for giving me this opportunity, and take the session further. Thank you very much.
Thank you, Preeti madam. Thank you for your opening remarks. So rightly said by Preeti that when I was listening to Nitin Gadkari and also all the dignitaries, including the president, vice president, and others, so like what comes out very clearly is like if, and chartered accountants will also have a bigger role to play if lot of organizations from Japan or other countries start to look at India as a manufacturing place and they want to come here, we will start by doing registrations. So why only providing finance or arranging finance from them, from registration to accounting to taxation to whatever, every support we can provide. So I see a brighter future. So with that, Let me do the task of introducing Vyomesh. So although I don't need to look at the biodata to introduce him, he's a very dear friend. That is the first thing. He has been always active at WIRC. He contributes at the WIRC reference manual also every year, and this year also he is contributing. So in the direct tax side, he reviews everything, all the inputs which comes from various things, and he is a regular speaker. He is also a student's man, so students are very close to him, and he goes on career counseling, and he does lots and lots and lots, not only for WIRC but also the branches also. So let me look at his profile now. So Vyomesh has around 11 years of work experience in corporate tax advisory and compliance matter, assisting various multinational companies and Indian corporates. He has worked on a mix of assignments which include advice on domestic tax issues, cross-border transactions, structuring of joint venture and foreign collaborations, inbound, outbound investment structuring, group structuring from tax and regulatory perspective, assisting startups in commercial, regulatory and tax compliance, etc. He's also provided litigation support to various clients. Vyomesh has been advising various multinational clients on direct tax aspects concerning compliance, and he's also been involved in various advisory due diligence assignments for multinational as well as Indian companies for business restructuring in the context of direct tax law. And he's also done a lot of work around exchange control regulation, mergers and business reorganization. He is currently Associate Director, Corporate and International Tax with BSR and Company LLP. So with that, over to you, Vyomesh, and
Yeah,
all the best
sir.
for the session. Yes.
Thank you. Yeah. Just to check, is my audio clear and is my screen visible?
Yes.
Okay. So thank you, Murtuza and Preeti madam for the warm welcome, and considering the time allotted, I'll directly move on to the topic. And we have about an hour or so to discuss direct tax Vivad Se Vishwas Act. I'm sure most of you have already gone through, or at least read about the act and the bill, as the case may be, till the time we discuss this. So just to give you a brief backdrop of the scheme, it is basically to minimize the litigation. And we already have 4.83 lakhs cases of direct tax disputes pending at various appellate forums. And the amount involved in litigation is 9.32 lakh crores, which is a huge amount. And therefore, it is a sort of an amnesty scheme which is there, which is provided, wherein you get relief from payment of interest, penalty, etc. And if the tax is paid on or before 30th of June, it is on the back of the successful implementation of Sabka Vishwas scheme, as you might be aware, in terms of indirect taxes and GST, where almost 1.89 lakh cases were settled in the indirect tax scheme. So on the success of that, the government has introduced now this VSV Act 2020 to settle the disputes of the income tax cases. Now, this is just a snapshot of the number of cases pending. I'll not spend much time on it. I'm sure the PPT will be circulated and uploaded. So this is just a snapshot of the cases pending and the amounts involved at various levels. You can just go through it. The number of cases is almost 3.8687 lakhs, and 9,61,000 crores, as we just discussed. And also, if you see, there is a slowdown in the collection of the of rather income tax, as compared to the budget estimate of 13.22 lakh crores. The revised estimate, which is reduced, which is 11.57 crores, even that has not been met, and till January it was 7.26 lakhs. Also, considering the COVID-19 situation, we expect it to go down further. So therefore, there is a lot of expectation on this act, on this scheme, that it will be a dual benefit. One, the disputes will be settled, the appeals will be settled and resolved, and secondly, the government might get few collection in terms of the principal amount of tax which is to be covered. Now, what I'm going to cover through my presentation in 55 minutes, an hour or so, is that I'll be covering what is covered, as in who is eligible to go for the dispute resolution or the Vivad Se Vishwas scheme, who are not eligible, that is the exclusions, that is non-eligibility. Then we move to the important part of what is payable, obviously, because when you go to the client, or when you are the client or an assessee, the very first question for any scheme is that how much am I required to pay? Only then you can take a decision. Once you know the amount which you are required to pay, after that only you can take a decision whether you should go ahead with the scheme or you should not go ahead with the scheme. So this is the walkthrough to the scheme. Now coming to the act per se, Direct Tax Vivad Se Vishwas Act 2020. The act has received its presidential assent already, and this is the framework of the scheme. We have the Direct Tax Vivad Se Vishwas Act 2020. Then we have the rules 2020. Then we have circular which contains the FAQs. Now the initial circular which was issued was circular 7 of 2020, which has now been replaced by circular 9 of 2020 with minor modifications post the act is being notified. And last but not the least, we have the instructions to fill the forms. Now as far as the forms are concerned, you have to fill up all the forms and declarations online on the income tax portal. The forms are provided in the rules, at the back of the rules, and along with the rules we also have the instructions to fill the forms. So considering the paucity of time, we may not be getting practical time to go through the forms in detail and discuss the practical nuances of the form filling. So the objective of today is to go through the scheme, to understand the eligibility, to understand the payment criteria, etc. And the procedural aspect of fill the forms, etc. can be taken care later on, considering that the due date has already been extended till 30th of June and maybe even beyond that. So therefore, this is the framework of the scheme. Now moving towards the act, it is a short act because it is for a specific purpose. So we have around 12 sections. First section is of course the short title. Then we have definition in section 2. Then we have section 3 which deals with the amount payable by the declarant. Section 4 is the declaration, the filing of declaration and particulars to be furnished. Section 5 deals with the time and manner of payment. Section 6 gives immunity from initiating proceedings in respect of offences and penalties. Section 7 says that no refund of the amount paid. This is only the amount which is paid under the scheme. There is a refund situation which we'll discuss subsequently later on. Section 8 says that no benefit or concession or immunity will be given to the declarant apart from what is provided in Section 6. Then subsequently, section 9 says that act not to apply. This is the section which gives you the exclusion, which says that the act will not apply to certain cases, which we'll see in the subsequent slides. Section 11, 12 is procedural, which gives powers to the board and the CBDT to make rules and to remove difficulties and issue directions as the case may be. Moving on to the rules. Rule 1 and 2, again short title and definition. Rule 3 deals with form of declaration, that is form 1, which is a declaration form, and form 2, that is an undertaking. Form of certificate by designated authority, that is form 3. Then intimation of payment. Once you make the payment, you have to make the intimation in form 4. For rule 6, manner of furnishing, which is online. Rule 7 deals with the final order which is to be passed by the designated authority, which is very, very important. This is the concluding step. Only once you receive form 5, you can say that your dispute has been resolved. Again, rule 8 rather is procedural, laying down procedure, formats and standards. Rule 9 and 10 is very, very important in terms of brought forward losses and brought forward MAT credit. We'll discuss this in detail when we come to the rules and the specific aspects of it. Last but not the least, rule 11 deals with the manner of computing disputed tax in certain cases, and it is followed by forms, as I said, that is form 1 to form 5. Now moving on to the eligibility, the very important aspect, who is eligible to go for the scheme. So here one important aspect which is relevant is the date. The matter should be pending as on 31st of January 2020. So this date is critical to be understood, and this is considered to be a cutoff date. 31st January 2020 is the cutoff date. And which are the matters which are covered? Appeals. Any appeal which is pending before either Supreme Court, High Court, ITAT or CIT appeal, all these are covered. At the same time, SLP and writ petitions before the Supreme Court or High Court is also covered. Orders where time limit for filing an appeal has not expired. So this is basically a deemed appeal, wherein on 31st of January you have an order in hand, but the time limit for filing an appeal against that order has not expired. So those cases are also covered. Then under the revised scheme, cases before DRP or AO after DRP directions is also covered. Initially, when the draft, I would say, when the bill was presented, at the bill stage, DRP was not covered, but subsequently with the amended bill, the DRP is also covered. Also, the revision application before CIT, that is 264 applications, is also covered. Last but not the least, it has also, the revised bill has also been extended to the search cases where demand is less than 5 crores. So this is an important addition. Even the search cases where demand is less than 5 crores are covered. Now what is important here is the 5 crore limit is to be looked at for the assessment year and not for the block assessment. Now as you are aware, in terms of search, there are block assessments being done for a period of say 6 years. So therefore, in case of block assessment, you need to look at the limit for 5 crores for each year and not for all the years taken together. Non-applicability, this is the exclusions, that is section 9 that we just discussed. So if you see this, search cases exceeding 5 crores is not covered because search cases up to 5 crores is only covered. Then when prosecution has been instituted, this is not covered. We have a FAQ, which is a revised FAQ on prosecution. We'll come through that when we come to the aspect of prosecution. Assessment relates to undisclosed income, undisclosed asset outside India. So this is important. When the assessment is in relation to undisclosed income or undisclosed asset outside India, this will not be covered under the Vivad se Vishwas scheme or the Vivad se Vishwas Act. At the same time, assessment, reassessment made on the basis of information received under DTAA from the overseas jurisdiction. So wherever overseas jurisdiction is involved and there is undisclosed income, undisclosed asset, or any information received on behalf of the overseas country, those cases are not covered in the Vivad se Vishwas Act. Also, the serious offences, that is order of detention under FEMA or Prevention of Smuggling Activities Act, all these are also not covered. At the same time, prosecution instituted or person has been convicted of offences under specified acts, person notified under special court tier of offences relating to transactions in Securities Act. So all these three, if you look at it, are severe offences, serious offences. So once you are convicted for these, you will not be eligible to get immunity under the Vivad se Vishwas Act. Moving on to the FAQs on eligibility. So what I have tried to do is I have tried to break the session or the presentation into two halves. The first one is on applicability and the second one is on the computation mechanism. Now we come to the FAQs, which is given by the severity White, the revised circular 9 on applicability. Then we move towards the liability and the computation aspects, and towards the end we take the FAQs on the computation. So coming to the FAQs on applicability, the first one is that if there is no appeal pending, but the case is pending in arbitration. So this is again an extension. Even the arbitration matters are covered. Even the arbitration matters are covered in terms of the Vivad se Vishwas Act. So whatever is the tax in dispute before the arbitration authorities, that also can be taken for the Vivad se Vishwas Act. Second, proceedings before the AAR. This is not eligible. The reason being there has to be disputed tax for us to go for the Vivad se Vishwas Act. Now in this case, practically what happens in an AAR is, as you are aware, authority for advance ruling. As such, there is no dispute here. The purpose of going to AAR itself is to avoid dispute generally, and you get an advance ruling from the authority so that you get a clarity on taxability or allowability of a particular expense. Considering that in mind, you go before the authority for advance ruling. So as such, there is no disputed amount or no disputed tax involved as far as AAR is concerned. Then moving on, an appeal filed against the interest levied on the assessed tax, but there is no dispute against the amount of assessed tax. So therefore, simple equation here is that there is a disputed tax, and there is disputed interest also. Say the interest is under section 234 BC or maybe 220 subsection 1, as the case may be, but you don't have to dispute, or you don't want to dispute the assessed tax. You just want to dispute the interest. Whether you are eligible, the answer is yes, you are eligible. However, where both the cases are involved, which we'll see separately subsequently also, where there is a disputed tax as well as disputed interest, in that case you have to go for the Vivad se Vishwas scheme only for the disputed tax, and the interest and penalty, if there is any, it will be waived off. So therefore, what is important here is that if you only have interest in litigation, then yes, you are eligible to go for the scheme. But if you have the dispute in terms of the quantum also, and also the interest as well as penalty, then you go for the scheme, you pay the quantum, and the interest and penalty will be waived off automatically. That is the beauty of this scheme, or that is the beauty of this act, that once you pay the quantum, the interest and penalty will be waived off. Next, what is the disputed demand? What if the disputed demand includes interest has been paid by the appellant while being in appeal? So therefore, the question is whether the credit will be available to me for the taxes which I have already paid. So if I have paid the taxes already, then in that case, I will get the credit of those taxes paid. If there is any refund, so for example, the amount computed under the Vivad se Vishwas Act is say 1 lakh. However, I have already paid 1,40,000 in advance. That is, while disputing the demand, I have paid 1,40,000 in dispute or under protest. So therefore, whether I will be eligible to refund of 40,000, the answer is yes. You will be eligible for refund of 40,000. However, if you have paid any amount during the Vivad se Vishwas scheme or under the scheme, then you will not be eligible to any refund for the amounts paid under the scheme. Nonetheless, if you have paid anything before going for the scheme, then you are obviously eligible to claim the benefit of, or you are obviously eligible to claim the credit of the taxes paid before, with a caveat that you will not be eligible to claim any interest under section 244A. So therefore, the limited point here is that you will get the credit of the taxes paid. However, you cannot earn interest out of the Vivad se Vishwas scheme. That is the limited point of this FAQ. Next, if the assessment has been set aside for giving proper opportunity to an assessee on the additions carried out by the AO. So what happens is, generally, for example, say the matter was pending before the ITAT, that is Income Tax Appellate Tribunal, and the ITAT remands back the matter to the assessing officer for giving an opportunity of being heard or for verification of certain factual or legal aspects, as the case may be. Generally, it is for verification of factual aspects. So if that is the case, whether I am eligible to go for the scheme even for the set aside matter, the answer is yes. You can go for the scheme even for the set aside matter, except where the assessment is cancelled and it has been sent back to the AO for the assessment to be framed de novo. So there is a difference between annulment of an assessment and set aside of an assessment. In a set aside proceeding, what happens is that the matter goes back to the file of the AO with a specific direction to verify certain aspects, whereas de novo is quashing the original assessment and sending it back to the assessing officer to effectively to do the assessment afresh. That is the difference between de novo assessment and set aside assessment. So in the set aside assessment proceeding, you are still eligible to go for the scheme, however with a caveat that you should also go for the scheme for the matter which is not set aside. So I have a case study on this in the subsequent slides, which will cover this example, that in case of a set aside matter, you have to go for both the matters, that is one which is already passed by the appellate authority, and the one which is pending before the AO, that is the set aside matter. So once again, we'll come to the case study in the subsequent slides, where an appellant desires to settle concealment penalty appeal pending before CIT appeal, while continuing to litigate the quantum appeal that has traveled the higher appellate forum. So take a case where the matter is assuming the quantum appeal, original appeal, is pending before ITAT, and subsequently the AO has also levied penalty on that particular edition. So that penalty appeal is pending before CIT appeal. So now the question is, can I go for Vivad Se Vishwas scheme only for the penalty and not for the uh, quantum appeal? The answer is no, you cannot do that. You should go for the appeal for quantum first, and the penalty will be automatically waived off. However, take a case where the matter is pending only for the penalty, and there is no dispute. There is no dispute for the quantum. In that case, you can go for the Vivad Se Vishwas scheme for the penalty and then pay the balance amount, uh, that is the 25% of the amount as far as the penalty is concerned. So this is the logic. If you have quantum as well as penalty both, then you should go for the quantum only, and the penalty will be waived off. However, if you have only penalty appeal pending, in that case you pay the 25% of the penalty amount, and you can go for the scheme. The balance 75% will be waived off. Moving on to the next slide. Is there any necessity to qualify under the Vivad Se Vishwas? The appellant should have tax demand in arrears as on the date of filing the declaration. This is not the case. Now the question is whether I should have an outstanding liability at the time of filing the demand, at the time of filing a declaration under VSB, or is it okay that I have already paid the taxes which is payable under the VSB, and as we saw earlier also that I can still be eligible for refund if I already paid excess tax. So therefore, if you have paid excess tax, even then you can go for the Vivad Se Vishwas scheme, and you need not have tax liability payable. Now for the seniors in the profession who are aware, there was an original scheme somewhere in the year 1996, that is Kar Vivad Se Vishwas, that is KVSS scheme, where the issue involved was you can go for the scheme only when there is tax arrears, that is you have tax payable. But that scheme did not go well because many cases were such where taxes were already been paid, but as such there was no tax arrears, etc. So that scheme did not go well. So the government has taken recognition of that scheme, the failure of that scheme, and they have incorporated that they can go for the scheme even if the taxes have already been paid, and refund will be granted to the assessees. So therefore, this is the beauty of the scheme, that even if there is no tax arrears, you can still go for the scheme. Then whether section 234 E and F appeals are covered, the answer is yes, they are also covered. You pay 25% or 30% of the disputed fee, the balance amount will be waived off. Moving on, when the disputed tax contains qualifying tax arrears and also the non-qualifying tax arrears, such as assuming I have undisclosed foreign income, etc. So there are 4 additions, out of which 1 addition is in relation to the undisclosed foreign income. The question is, can I go for the scheme for the balance part, that is the one which is not related to the undisclosed foreign income? The answer is no. Once you are not eligible for the entire order. You cannot do piecemeal distribution of the order and go for the scheme for one part, and you cannot opt out for the other part. Once you are not eligible, you are completely not eligible to go for the scheme. Then the next one is important. If a writ has been filed against initiation of 148, that is reassessment proceeding. So here the fact is that only reassessment proceeding has been initiated. There is no assessment order under section 143(3) read with 147 or 148 as the case may be. So therefore, what is important here is that there is no disputed tax. You are just challenging the jurisdiction, or you are just challenging the notice initiating reassessment proceeding. As such, there is no demand here. Since there is no demand, you cannot go for the scheme for the 148 proceedings for which the orders are not yet passed. Moving on, with respect to interest under section 234 ABC, there is no appeal, but the assessee has file a waiver application. Now here again, it is just a waiver application, but no appeal is pending. So what is important here is that there has to be a disputed tax or disputed interest for which the appeal is pending. Waiver application is not an appeal as such, so therefore it is not covered. Will the delay in deposit of TDS TCS be also covered? The answer is yes, it will also be covered. However, if there is no dispute relating to TDS or TDS or TCS and the dispute is only in relation to interest, even that is covered. So when you have interest dispute as well as the TDS amount dispute, then you pay the disputed amount, interest will be waived off. Whereas if you only have interest in dispute and you are not contemplating any dispute against the quantum, in that case you pay 25% of the interest and the balance 75% will be waived off. Are the cases pending before DRP covered? Yes, all the cases before DRP are covered, irrespective whether the DRP has passed the order or DRP has not passed the order. So even if the DRP has passed the order and the final order is not yet passed, in both the scenarios, the DRP will still be covered for the Vivad Se Vishwas scheme. Moving on, if CIT appeal has given an enhancement notice, so enhancement notice is given under section 251 of the Income Tax Act, where the CIT appeal also has the power to enhance the income. Whether I can go for the Vivad Se Vishwas scheme in that case, the answer is yes, you can go for it. However, the enhancement or the proposed enhancement has also to be included in the original demand, that is a disputed tax, and then you can go for the scheme for both the amounts taken together. Are the disputes relating to wealth tax, STT, that is security transaction tax, or commodity transaction tax, or equalization levy covered? The answer is no. The scheme only covers Income Tax Act. The scheme only covers income tax disputes and no other disputes. 16 is important. The assessment order under section 143(3) of the Act is passed in case of an assessee for AY 1516. The order is pending before ITAT. Subsequently, reassessment order is also passed under section 147 read with 143 or 143 read with 147 as the case may be, and for the same assessment year, and this is pending before CIT appeal. Now the question is, can I go for Vivad Se Vishwas for the original assessment? The answer is yes, I can very well go. Can I go for the Vivad Se Vishwas for the reassessment? Answer is yes, I can very well go. The third or the important question is it compulsory or mandatory for me to go for Vivad Se Vishwas for both the proceedings, that is original assessment as well as reassessment? Here the relief is granted that since both these are independent proceedings, you can opt or you can choose either to go for the original assessment or to go for reassessment or to go for both together. You have all the three choices open to you, and then you can decide for which matter you have to go. If you want to go for both the matters together, you can file a single application, single declaration form covering both the aspects together in the same declaration. Alternatively, you can go for either of the two also. Next, in case there is no disputed tax, however there is appeal for disputed tax, the penalty for which has been disposed of by the CIT appeal on 5th of January. Time to file an appeal in the ITAT is still available, but the appeal has not yet been filed. So here, as I said, even if the due date, this is called as deemed appeal, even if the due date has not passed as on 31st of January 2020, you can still go for the scheme. Now the question is it necessary for me to go for to file the appeal even after 31st of January? The answer is no. Even if you don't file the appeal before or after 31st of January, you are still eligible to go for the scheme, because any which ways you have to withdraw your appeal if you have filed any. So in this case, you need not file an appeal. Even if your due date is not expired as on 31st of January, you can still go ahead and get the benefit of the scheme. In a case ITAT has post assessment order back to the jurisdiction of the AO, the department has filed an appeal in the High Court which is pending. Is the assessee eligible to settle this dispute under Vivad Se Vishwas? If yes, how the disputed tax is calculated? So here what is important is When department has gone to appeal, in that case, you are required to pay only 50% of the disputed tax and not the 100%. So here, since it is a department appeal, you are required to pay only 50%. Then in case of assessee, prosecution has been instituted. This FAQ has been revised by the CBDT. It says that where prosecution has been instituted and is pending in the court. So here, where only notice for initiation of prosecution has been issued without prosecution being instituted, the assessee is eligible to file declaration under VSP. However, where the prosecution has been instituted, in that case you cannot go to VSP or you cannot file VSP declaration unless that prosecution is compounded. So if merely a notice is issued, you can still go for the Vivad Se Vishwas scheme. But if the prosecution has already been instituted, in that case you have to get that compounded first, and only then you can go for the Vivad Se Vishwas scheme. Now this is all about eligibility. Now we move towards the how to compute the tax and what are the taxes covered and amount payable, etc. So these are the taxes covered, which are obviously in accordance with the Income Tax Act. The aggregate amount of disputed tax, interest chargeable or charged, or such disputed tax and penalty leviable or levied on such disputed tax. So this is a case of a combined order having disputed tax, interest as well as penalty, or separately any disputed interest, that is also covered, disputed penalty, that is also covered, disputed fees, that is also covered. So your normal tax is covered, your normal tax plus the disputed interest in a combined order, that is covered, plus separate matters with respect to separate disputes with respect to interest, penalty or fees as the case may be, those also are covered under the scheme. Now, what is the amount payable? This is important, provided in section 3. Now, I will come to the bottom half of the table first and then come to the first half of the table. So, I am here, appeals filed by the assessee. So, cases other than search cases, the amount which I have to pay is 100% of the disputed tax, 100% of the disputed tax. Interest, penalty, fees will be waived off if I am paying this up to 30th of June. If the payment is after 30th of June, then the amount which is payable is additional 10% I have to pay. So 100 ka 110 ho jayega. 110% is the disputed tax that I am required to pay. Again, interest, penalty and fees will be waived off. In case of search cases, there is an additional liability of 25% if I am paying before 30th of June. So 100 ka ho jayega 125%. However, if I am paying after 30th of June, as I said, again 10% additional, so 125 ka ho jayega 135%. As far as penalty is concerned or interest is concerned, if the dispute is in relation to interest, penalty or fee, the amount payable is 25%. If I pay after 30th of June, there is an increment of 5%, so the amount payable after 30th of June comes to 30%. Now, in case of, as I said, department appeal, I have to pay only 50% because the matter is in my favor by the ITAT or High Court as the case may be. So if the matter is in my favor and it is a department appeal, as against 100%, I have to pay 50%. Similarly, as against 125%, I have to pay only 62.5%, that is half. So if it is department appeal, I have to pay only half or 50% of the amount involved in dispute. Now, coming to what do you mean by disputed tax? How do you calculate disputed tax? So, you have 6 different subclauses and 2 provisos. I have covered one proviso here and second proviso is in the subsequent slide. So, the 6 subsections reads as under, or rather 6 clauses reads as under. A says, where an appeal, writ petition or SLP is pending before any appellate forum, then in that case, the assumption is that the matter is decided against the taxpayer. So, here, one important point that we need to consider is that the thumb rule is you have to assume that the matter will be decided against me and accordingly calculate the amount of disputed tax. So whatever is the appeal pending, I have to assume that it will go against me and thereby I compute the disputed tax considering that the appeal is dismissed against me. When an order in appeal or writ has been passed and the time limit for filing the appeal or SLP has not expired. So effectively here we have an appellate order, but I have not filed the subsequent appeal, but the due date is still available to me before 31st of January to file the appeal. In such cases, the order giving effect to the last order passed, assuming if it is an IT-80 order and I still have time to file appeal before High Court, then in such cases, after giving OGE, after giving effect to the IT-80 order, whatever is the tax disputed, that will be considered to be the disputed tax. That is after giving OGE to the IT-80 order. When an order has been passed by the AO and the time for filing an appeal against such order has not expired, in such case it will be in accordance with such order, that is the AO order will be considered the tax disputed as per the AO's order will be considered to be the disputed tax. Where objections are pending before DRP, in that case we have to assume that a DRP will confirm the variations and thereby compute the tax liability, that is disputed tax, assuming DRP is going against me. Same thing, if the DRP has issued the order, after giving effect to the DRP order, the amount will be considered for disputed tax. Where an application for 264 is pending, that is revision, which is prejudicial to the interest of the assessee. Here the assumption is that you have to assume that this application is rejected or it will not be accepted. Last, if CIT appeal has issued notice of enhancement, we also saw this in the FAQs. So it says it is to be increased by the taxes pertaining to the issues for which the notice of enhancement is issued. Then coming to the second proviso, as I said, Rule 9 and Rule 10, this is important. If the dispute is in relation to reduction of MAT credit or AMT credit, then the assessee has two options. Option 1, either to pay the disputed tax in relation to the amount of MAT credit or AMT credit, or option 2, I don't pay but I reduce the carry forward of the MAT credit or the carry forward of the depreciation or unabsorbed loss, as the case, or unabsorbed depreciation or brought forward loss, as the case may be. So here also, this is the beauty of the provisions, that you are given an option, either you pay the disputed amount for the brought forward losses, etc., or brought forward MAT credit, or if you don't want to pay, you reduce the carry forward of the MAT credit or the loss or unabsorbed depreciation and carry forward the reduced amount. So how do you do that? We come to it in the subsequent slide. If I opt not to pay, if I don't want to pay the disputed tax in this case, then what do is I reduce, for non-search cases, I reduce 100% of the brought forward loss or carry forward loss and carry forward the reduced amount or the balance amount. Now this is beneficial to me where I have ample of brought forward losses or ample of MAT credit, and I believe that I may not be in a position to set off this loss in the coming future, or I will not be having normal tax liability to set off this MAT credit. For such situations, this option is beneficial. For non-search cases, it is 100%. For search cases, as we saw, the amount increases to 125%. At the same time, if the matter is covered in my favor, I have to pay only 50%. That is what we discussed in the earlier slides. As far as MAT credit is concerned, in search cases, if 125% of the disputed income exceeds the brought forward MAT credit, then this excess should be negated, or this excess should be ignored. So therefore, you are required to reduce only to the extent of maximum MAT credit available. If you exhaust the entire limit, the excess is to be ignored. Again, if you opt to pay, then whatever is the disputed loss or depreciation or disputed MAT credit, you pay that amount 100% in case of non-search cases of the respective, either the loss, the tax on that particular loss, or the MAT credit, as the case may be. If the matter is in your favor, you pay only 50%. However, in search cases, the same thing, you increase it by 125% in case of loss or unabsorbed depreciation. MAT credit, as we discussed, it will be restricted to the MAT credit which is available. So therefore, here, these are the cases where, assuming I have already set off the losses in the subsequent years, for such scenarios, I can use this option and I can make the payment of the taxes which are involved there rather than reducing the brought forward loss. So therefore, you need to look at the practicality of each case and then decide which option is more beneficial to you in terms of whether to make the payment or to adjust the credit as the case may be. Now, these are the case studies on disputed demand, which includes interest. So assuming my returned income is 3 lakhs plus I have suo motu calculated interest under section 234B of 10,000. Total interest paid is 3,10,000. This is as per my return of income. There is a subsequent addition of disputed tax of rupees 1 lakh. And there is also a disputed interest which is levied by the tax authorities, be it 234B, 234C or 220 as the case may be. And the total additional demand is 1,60,000. And the assessee has also paid 1,40,000 while the appeal is pending in dispute. Now there are few cases, few assessees who make the payment to stop the meter of the interest liability. Now the assessee knows that my case is strong, but still I don't want an interest liability continuing on my head. So rather I pay in the dispute in protest rather than increasing the interest liability on my head. So therefore, it is important here in such cases that you will be eligible to refund without any interest under section 244A. So here if you see what is the additional demand, it is 1 lakh rupees. So you have to just pay this 1 lakh rupees and this 60,000 will be waived off. Now in this scenario, the disputed tax comes to 1 lakh. However, I have actually paid 1,40,000. So I will be eligible to a refund of INR 40,000. I will be eligible to a refund of INR 40,000. Moving on to case study 2. If anybody has questions, we can take up the questions in the last 5 minutes. Considering the paucity of time, I need to finish off my presentation by 3. Matter set aside. This is what I was talking about in the FAQs, that if the matter is set aside. Now assuming the same case where my return income is 1 lakh, my interest liability which I have suo motu calculated is 10,000. So tax and interest paid as per return of income is 1,10,000. There are two grounds. Disputed tax in respect of ground 1 is 62,400 and ground 2 is amount is 93,600, the additional demand. For ground 1, both CIT appeal and ITAT have confirmed the addition. So this matter is covered against me. However, the ground 2 has been set aside by the ITAT to the file of the assessing officer. In this case, I have to go for Vivad se Vishwas for ground number 1 and ground number 2 both taken together. I cannot opt any of the one. This is what the FAQ which we discussed earlier also said. So here the disputed tax is 1,56,000, 1,56,000, and the disputed interest which is 25,000 and 35,000, 60,000. This 60,000 will be waived off. So out of the total demand of 2,16,000, I just have to pay 1,56,000. That is the disputed tax. The interest accordingly will be waived off. So coming to FAQs on calculation quickly. In case of appeal or arbitration pending on the specified date, but a rectification is also pending with the AO, which if accepted will reduce the total tax in the total assessed income. In such case, the important point here is that the disputed tax will have to be calculated after considering the rectification order. So this is an important development, that what practically happens is there are a lot of rectification applications pending before the AO, but either the AO does not have time to dispose of, or at times the assessee or the consultant also forgets to follow it up with the tax authorities, and therefore they are pending since long. This is an opportunity to get your rectification applications also sorted and rectification applications also disposed, and thereby reduce your disputed tax and pay the reduced amount only. Second, whether the credit for the earlier taxes paid against the disputed tax will be available against the payment to be made under the scheme. The answer is yes. If you have paid excess, you will be getting refund also. At the same time, if you have out of 10,000, if you have paid 8,000, you are required to pay only 2,000 by 30th of June. where assessee settles, now this is important, the TDS appeal or withdraws the arbitration against 201 as deductor of the TDS, will credit of such taxes be allowed to the deductee. Now here the answer given by CBDT is that deductee shall be allowed to claim the credit of the taxes paid in respect of the deductor, in respect of which deductor has availed the dispute resolution under Vivad se Vishwas. However, the credit will be allowed as on the date of the settlement of dispute by the deductor. Hence, the interest as applicable to the deductee shall apply. Now, here what is important is that the default is of the deductor. Default is of the deductor, right? So therefore, the interest liability is also of the deductor. Here, the CBDT says that the claim of credit will be allowed to the deductee, that is the payee. However, it will be subject to interest. Now the question is, if I am the payee, I have not defaulted. The default is of the deductor. So therefore, how can you levy interest on me being the deductee? So there is a dilemma in respect of TDS. And also, if you look at the subsequent FAQ, the fourth one, it says where the assessee settles TDS liability as deductor of TDS under Vivad se Vishwas Act, that is against order under section 201, when will he get the consequential relief of the expenditure allowance under section 40A? So here it says the deductor shall be entitled to get consequential relief of the allowable expenditure under 40A or 40A in the year in which the tax was required to be deducted. Now here this is against the Income Tax Act, because if you see 40A or 40A, the act says the deduction will be available in the year in which the tax is deducted and paid. Now here if you see the tax is deducted and paid in the current year, but the CBDT circular says that you will be eligible to get the credit in the year in which it was required to be deducted. So here again it is, while it is in favor of the assessee, but practically speaking, this is not in accordance with the act. So therefore there is a dispute, or rather there is a difference as per the act and as per the circular. And as you know, in terms of conflict between the act and the circular, the act will prevail. So this is another dilemma in terms of liability, etc. So as I said, even if you look at the subsequent one, fifth one, where the assessee settles his appeal or arbitration under Vivad se Vishwas, will the consequential relief be available to the deductor? This is the other way situation where the deductee or the payee settles his dispute under the Vivad se Vishwas Act, and the deductor is also having a liability under 201. Whether that will be nullified, the answer is yes. The deductor will get a benefit. However, he will be eligible or he will be liable to interest under section 2011A. So therefore, that interest also can be taken under the Vivad se Vishwas Act with payment of 25%. So here, as I said, TDS cases are a bit tricky, and you need to be very, very mindful of going for Vivad se Vishwas. If you have litigations under the quantum appeal under 143.3 also, and also 201 proceedings, you need to be mindful and consider both the aspects while computing the tax liability under the scheme, and only then decide whether to go for such for such matters before the Vivad scheme or not. Next, moving on, appeals against assessment order against the penalty order are filed separately on the same issue. Hence, there are separate appeals. In such case, how disputed tax is to be calculated. So here, as I said, both the appeal against the assessment order and the penalty relating to the same assessment proceeding, he wishes to settle the appeal against the assessment order, then he has to give reference to both. You have to give reference to both, that is the quantum appeal as well as the penalty appeal, and the penalty appeal will automatically be disposed of, and there will be no penalty levied if you are paying the quantum. However, if there is only penalty involved, then you have to pay only the 25% of the penalty, and there is a question of quantum involved in that case. Moving on, if there is substantive addition as well as protective addition. So here they are saying if there are both the matters involved, in 1 year there is substantive addition, second year there is protective addition. I am going for Vivad se Vishwas for the substantive addition. Once that dispute is resolved, automatically the protective addition should be released, and the AO should pass a rectification order and close the protective assessment also. In case where ITAT has passed order giving relief on 2 issues and confirming 3 issues, time to file appeal has not expired. This is important. The taxpayer wishes to file declaration for the 3 issues which have gone against him. What about the other 2 issues? So here what is important is that tribunal has passed a consolidated order. 2 grounds are in my favor and 3 grounds are against me, right? So now here the FAQ says I have a choice to go for the Vivad Se Vishwas scheme for the matter which is against me or for the matter which is in my favor, assuming the department will go into appeal. I have an option to go for either of the two, or I have an option to go for both the matters taken together, right? In case I go for the matter which is in my favor, I have to pay only 50%. I have to pay only 50%. And thereby the department, if it has filed an appeal, it will have to withdraw that appeal. Next, there is no provision for 50% concession in the appeal pending in the High Court on which the issue where the assessee has got relief in the Supreme Court. So here CBDT says if you have a favorable Supreme Court order, then in that case the High Court is bound to follow the Supreme Court order because Supreme Court order is binding on the High Courts, and as such there should not be any disputed tax. So therefore you cannot go for the Vivad Se Vishwas scheme under such situation. Addition was made under section 143 on 2 issues, whereas appeal was filed only on 1 addition. Now the question is whether the interest and penalty can be waived off for both the additions. The answer is no. Only the disputed tax wala matter will be considered, for which you have filed an appeal. Interest and penalty against that addition only will be waived off, and not for the addition which you have already conceded. However, if you have filed an appeal against interest and penalty for the ground which you have exceeded also, in that case you can go for the Vivad Se Vishwas scheme and pay 25% and then get that matter resolved also. Moving on to the next one, DRP has issued directions confirming all the proposed additions in the draft order. Issues confirmed by the DRP include an issue on which the taxpayer has got a favorable order from the ITAT, which is not reversed. So here the important aspect is for the ground which is in my favor, I am required to pay only 50%. I am required to pay only 50%. For other grounds, yes, I will be required to pay 100%. But for the grounds in my favor, I am required to pay only 50%. When 2 appeals are pending, where 2 appeals are filed for an assessment year, that is cross appeals, department appeal bhi hai, assessee appeal bhi hai. The question is, can I go for both, or I have an option to go for only one? So here I have an option as an assessee. Either I can go for both the appeals by filing a single declaration, or I can file a declaration for either of the appeals. It is my choice because, as I said, it is qua the proceeding. It is qua the proceeding and not qua the assessment year. Vivad Se Vishwas scheme is always qua a proceeding and not for the entire assessment year. Procedure and implication quickly. I'll wrap it up in 5 minutes and then we open for questions. Procedure is that I have to file a declaration and undertaking. Declaration is in form 1. Form 2 is an undertaking that I will withdraw my appeal. Form 3 is order passed by the designated authority that is and issuing a certificate which will give me the amount to be paid. Then I make the payment within 15 days in step 3. Then in step 4, I intimate to the designated authority along with the proof of withdrawal of appeal in form 4. After that, the designated authority will pass form 5, that is order stating that the taxpayer has paid the due and the dispute is settled. This is the important step. Unless you get form 5, you cannot say that my dispute is settled. So getting form 5 from the designated authority is very, very important. The last step is very, very important. Now, coming to the implications. What are the implications? Adjustment is permitted in respect of the amounts already paid with refund available. Of course, you get refund, but you don't get interest. That's what we discussed. Declaration to not to amount to considering the tax authorities position or the assessee's position. So effectively, you can continue to litigate on the similar grounds or the same grounds for the subsequent years. It does not mean that you have gone for the VSP. You give away your right for the other years. At the same time, it applies both ways to the department as well as to the assessment. It gives you immunity from prosecution, penalty, interest in respect of tax arrears. Matters covered by the order and are conclusive, and it cannot be reopened in any other proceeding. So once you conclude this order, your dispute is resolved for that particular matter. It cannot be reopened by anybody. Revival of proceedings, claims and consequences in case false declaration or violation of conditions. So here, if you are giving any false declaration, then your application becomes void, and whatever was the proceeding which was pending before the appellate authorities, that will be revived altogether again. Amounts paid will not be refunded. As I said earlier, that if you are paying any amount under the Vivad Se Vishwas scheme, you will not get a refund. However, if you have paid something prior to the scheme as self-assessment tax or tax on regular assessment, in that case you will be eligible to a refund if any. But you will not get any refund of interest. You will not get any interest under section 244A. So immediate steps. What are the immediate steps that you need to take for filing the scheme? First of all, you check whether any of your appeals is eligible to go under the scheme. That is the first step. Then you take the quantification of the amount payable proceeding wise. As I said, it is proceeding wise and not assessment year wise. And then you perform a cost benefit analysis that if you continue to litigate, what will be the cost involved? That is the tax, interest, penalty, etc., plus the cost of litigation involved. That is the consultant fee, the fees of the counsel, etc., as the case may be. And then you decide which is more beneficial to me. Plus, here an important point is that you also need to check if it has any impact on the subsequent years. For example, carry forward loss, brought forward loss, or any matter which is recurring, etc. So you need to factor in that situation also before going for the scheme. And if you need any clarification, the department or the CITs and the additional commissioners are very receptive, and they are ready to discuss your matter on case-to-case basis, on each case-to-case basis, and provide their views or prima facie clarification on what they feel in terms of the issue involved, etc., so that you can get a breather or a sense from the tax authorities and then file the appeal. If you need any clarifications, etc., the department is happy to provide you the clarification. So here, what is important is that you have to proactively approach your jurisdictional AO or the designated authority, and then go for the scheme or discuss the doubts, queries, etc., and then conclude whether you should go for the scheme or you should not go for the scheme. So I think with this, I conclude. I know I had to rush because only 1 hour is there with us. So therefore, I had to rush because I wanted to conclude on I wanted to cover all the aspects. So I tried my best in the allotted time. If any questions, I'll be happy to take it up in the interest of the time. Else, we can take the additional questions offline also. Over to the organizers.
So, Vyomesh,
Yes,
excellent session. In fact, I should say a marathon session, and you could cover everything in such a great detail in the 1 hour allotted to you, and you are really non-stop. So definitely let us take few questions. Mishraji,
yes.
Questions.
Yes, sir, yes.
I would request all the participants to type their questions in the chat box, and Mishraji will present to Vyomesh on the screen all the questions, and Vyomesh will try to answer. Vyomesh, the first one is here.
Yeah. AO has passed an order subject to report from DVO, which is received with higher valuation. Objection is raised in July 2012, but the revised order not passed till date. The date, though the notice under section 144 has been denied by the AO, CIT appeal has asked to opt for Vivad Se Vishwas on the basis of first order, which is on his table. If I accept the first order, whether I will have to accept the revision order under section 154 and have to pay the higher tax? The answer is yes. If there is any rectification, you have to consider the higher tax and then pay the pay the demand after considering the 154 order, assuming the 154 order is already been passed. In this case, I assume 154 is passed. Therefore, you have to consider 154 also. Second question, don't you think that this scheme is for encashing at discounted rate the future income by the IT department when the appeals are filed by the IT department? Again, I don't think it is good on my part to comment on encashing at discounting rate. The intention is very clear that they want to resolve the disputes. Yes, they will get some revenues, but at the same time, if you look at it from the assessee's perspective, your disputes are also getting resolved. Question number 3, it is noticed that form number 1 of declaration is defective, incorrect, and not logical. It considers for payment of taxes only on disputed amount of income and tax, but fails to consider the issue of the amount of income and tax and interest thereon, which is not disputed in the appeal. In reality, tax and interest which is not disputed in the appeal ought to be paid. However, the same is ignored in designing the form. Have you come across such cases? It is noticed that form number 1 of the declaration is defective. I think it is repeat copy paste. So yes, in fact, there are many nuances in terms of form, and we have also taken up with the authorities that your form 1 needs to be revised and revamped. And we have been given assurance by the CBDT that yes, they will be working on the on revamping of form 1, and they will make all the corrections or additions modification required to the form 1. So I think in the time, considering that the due date is 30th of June, they will come out with the revised forms, or they will update the form shortly, is what I understand from the authorities. What about part payment made? Yes, I have covered it in my FAQs also, that part payment will be adjusted and you will be required to pay only the balance amount. If your payment is in excess, then you will also be eligible to get refund. Can you explain, if the forms are not digitally signed, is there any alternative way to sign the form other than DSC like EVC? No, as of now, I think the DSC option is only valid. EVC is not yet operational. What we understand is that DSC is the only mode currently. I'm not sure whether the security will revise this option and give you the EVC option as well. I think we have taken 5 questions. If there are any questions, you can mail it to me. Additional questions, we'll cover it up and I'll reply to WIRC, and then it can be uploaded. In the interest of the time, I don't want to take up the time of the next speaker, please.
Thank you, Vyomesh.
Thank you, sir.
Again, for covering the questions so fast. And so like for the participants also, actually, we had initially planned each session on one day. So the speaker would have got 1 hour, 15 minutes, and then question answer, etc. But then now, because of the revised guidelines from ICI, we had to club three sessions into one day, because we can do only 5 events in 15 days. And since we had already signed up with the speakers and had the topics and included a newsletter, we had to cover all of them. So, but having said that, you can send all your questions still. You can type it now. You can even send it on wrc@ici.in, and we'll consolidate everything, send it to Vyomesh, get his answers, and upload on WIRC website. And if there is a need, we can even, like, WIRC staff will also answer one-to-one as well. With that, let me also recognize presence of.
Just one disclaimer on the answers or the questions. Those are my personal views. Those are not the views of my firm nor the views of the government.
Agree. Thank you. So I also recognize presence of my colleague, regional council member, CM Manish Gadia. Manish bhai, welcome. And I would now request Manish bhai to please do a formal vote of thanks for the first session. A much and well-deserved vote of thanks for Vivas Vishwas and Vyomesh Pathak.
Thank you, Murtuza bhai, for giving me this opportunity. So all of you, all participants, attendees will agree with me that Vyomesh has played a 2020 instead of test match as far as today's topic is concerned, that is Vivas Vishwas. So fantastically, he has covered everything in a limited period of time. Apart from that, he has also covered the question and answer. So thank you very much, Vyomesh, and in future also we'll seek your services. Thank you.
Sure. Thank you. Thank you very much.
With that, let us move on to the second session for today. And we have the second learner speaker, Tia Darshana Jain, with us, and she is going to cover the overview of external commercial borrowings. May I again request Manish Bhai to please introduce the second speaker.
Tia Darshana Jain is a director, international tax and regulatory with BSR and Associates LLP. She has over 13 years of experience in handling complex tax and regulatory matters. Darshana has gained the extensive experience in income tax and FEMA related matters, including structuring, inbound, outbound investment into or from India, international tax treaties, provisions, etc. Darshana she has handled international and domestic tax matter with income tax return assessment appellate. Darshana has appeared before various authorities also, including income tax authorities, RBI, etc. She has a very good experience as far as the FEMA related matters are concerned. With these few words, I request all of you to welcome Darshana. Over to you, Murtaza bhai.
Thank you, Manish Bhai. And over to you, Darshana. You can get started. Darshana, we can't hear you. I think you are on mute.
दर्शना आवाज नहीं आ रही है. मिश्रा जी जरा चेक करो, शी इज ऑन म्यूट और व्हाट.
मैडम आपका माइक म्यूट है. चालू है मैम, बोलिए. आवाज नहीं आ रहा है. एक बार हेडफोन निकाल के ऊपर डालिए ना मैम. हेडफोन निकाल के ऊपर डाल के चालू करें.
Hello.
हाँ,
Yes.
ओके.
Yeah. Thanks. Am I audible, sir?
Yes, clear.
Yeah. Okay. So thank you, Manish Bhai. Thank you, Murtaza sir, for the warm welcome. And with the shifting the gear from income tax to foreign exchange, I'll do my best within 1 hour to explain the topic. So without much of ado, I'll move on to the topic and I'll start sharing my screen. Is my screen visible?
Yes.
Okay. Thank you. So today's topic is basically overview of external commercial borrowing and what are the respective foreign exchange guidelines surrounding the same. So next, move on to the next slide. Let's understand the framework. Before we move on to external commercial borrowing, it is very important to understand the framework of Foreign Exchange Management Act. Unlike Income Tax Act, Foreign Exchange Management Act is a very small act. It just has 49 sections. And majority of the provisions are governed by regulation, APDR circulars issued from time to time by Reserve Bank of India. Now under foreign exchange, what happens that any transaction, is either bifurcated into capital account transaction or current account transaction. Capital account transactions are generally very strict in nature and permissible only as stipulated. So few examples of capital account transaction would be inbound investment, outbound investment, including external commercial borrowing. And current account transactions are generally permissible, less kind of stringent, unless they are specifically prohibited. So with this particular bifurcation, the relevant ECB is also a capital account transaction. Section 6 of Foreign Exchange Management Act defines a capital account transaction. In terms of regulation, FEMA 3R is the respective regulation for external commercial borrowing. Now, this regulation have been recently amended and replaced. Earlier, for the ECB, there were two parts, lending in rupees and borrowing and lending in INR, foreign currency and INR. So there used to be two kind of a notification, FEMA 3 and FEMA 4. Now, effective December 18, Reserve Bank of India have liberalized overall regulation and combined both borrowing and lending in foreign currency and rupees in FEMA 3R. So basically what happens, with the evolving economy, Make in India concept, government would want that Indian players also have access to overseas market. And at the same time, there has to be a healthy mix of equity as well as debt. Because everybody would know that, the external commercial borrowing or the overseas loan generally are available at a cheap rate. compared to the domestic loan. Hence, with this idea, government, the Reserve Bank of India have come out with the new FEMA liberalized guidelines under FEMA 3R, and the respective framework is also being introduced very recently for governing its each and every transaction, including the provision, effective 16 January 2019. Now, as I mentioned, that FEMA is a very small act, and majority of its provisions are governed by regulations and APDR circular. APDR circular, generally depending on the economic changes or the changes in various macroeconomic factor, Reserve Bank of India have to issue this APDR circular for each of the transaction, and there is a concept of master direction. So all these APDR circular which have been issued in a particular financial year get compressed and consolidated, and a master direction is being issued and also being showcased on the website for the convenience of the constituent as well as the bankers. In addition to that, there are frequently asked questions issued by Reserve Bank of India to address to the routine, so that all the users in a user-friendly manner can interpret the regulation, etc. And the most important role I would like to also highlight here is played by authorized dealer, the banker, because RBI is the central bank of the country. They focus more on policy matter, macroeconomic matter, and with respect to procedural aspect, filing, compliance, all the powers have been delegated to authorized dealer. So while dealing with any cross-border transaction, it is very important to be in clear, and clear kind of deliberation has to happen with the bankers, and all these relevant regulation, APDR circular, direction, and FAQ need to be gone through very suitably before coming out or deriving out at any conclusion. So with respect to ECB, the master direction is dated 26th March 2019, and it keeps getting updated. The last updated version is of 8th August 2019. And in terms of FAQs, the FAQs are dated 29th May 2019. So as a thumb rule, ECB is a capital account transaction permissible only as stipulated, and in case of doubt, always seek references, etc., including discussion and deliberation with the banker. With this, I'll move on to the next slide. Now, what are the forms and routes of the external commercial borrowing? So just to understand the term external commercial borrowing in a simple language would be loan, or maybe called as a commercial loan. So commercial loan raised by eligible resident entity from recognized non-resident entity, conforming to various cumulative guidelines, which we will discuss in the ensuing slide. So these are basically any Indian entity, if they want to expand their business, or if they want to restructure or carry out any kind of a greenfield activity, it is always good to have a mix of equity as well as a debt, so that the financial ratios are also not screwed, and at the same time Indian company can have access to the overseas fund without diluting their equity capital. So with this, there are two forms, or there are two ways in which ECB can be availed. It could be either in foreign currency or it could be in INR. Now, just to take a step back, before December 18 regulation, there were 4-tier structure under ECB. So say, for example, if any Indian company would want to avail ECB, there were 4 track 1, 2, 3, and 4. It was quite complex. Accordingly, Reserve Bank of India, through this amended notification, have clubbed this 4 track into 2 track. So the erstwhile track 1 and track 2 is nothing but a foreign currency ECB, and track 3 and rupee denominated bond is nothing but INR ECB. Now, also to clarify here that ECB route does not apply to non-convertible debentures issued to resident foreign portfolio investor, because there are separate set of guidelines under FEMA 20R. Now, what are the routes under which the ECB could be issued? There are two routes. One is automatic route and the approval route. Automatic route is where no prior approval of Reserve Bank of India is required if all the condition as prescribed under the ECB guidelines has been satisfied. What is only required is to do various filing and the compliances to avail the ECB. So there is a requirement to obtain a loan registration number from RBI, and this can be done by filing form ECB through AD Bank. Earlier, this form ECB was called as form 83. In addition to that, once the loan registration number is obtained, basis that number, the ECB could be availed from the overseas lender. And then there are monthly filings in terms of day-to-day operations, so as to see and monitor that the ECB has been ultimately used for the purpose for which it has been availed. So then what falls under auto approval route? So for example, it might so happen that there are at least 10 parameters which need to be satisfied to avail the ECB. If a particular entity is able to satisfy 4 parameters and not the balance 2, in such a case, a prior application will have to be filed with Reserve Bank of India. And on the merit of the case. So what are the merit of the case? It will be macroeconomic situation, overall guidelines, profitability, etc. This application will be put across to RBI empowered committee depending on the quantum, depending on the duration of the loan, and basis all the clarifications and the deliberations, including all elaboration given the application will be approved by the Reserve Bank of India. And once this application is approved, all the subsequent filings, all the subsequent procedural aspect is the same as being mentioned under the automatic. Now, what are the different types of loan? So the loan could be in the form of bank or any other loan. It could be in the form of securitized instruments such as bond, non-convertible, optionally convertible, or partially convertible preference shares. It could be in the form of FCCB or FCEB. It is also within the framework of external commercial borrowing, that is foreign currency convertible bonds and foreign currency exchangeable bonds. Then finance lease will also form more than 3 years under the external commercial borrowing guidelines, and a trade credit exceeding 3 years. So having understood the forms and routes, let's go to next slide to understand the key parameters. As I highlighted earlier, each of these 7 parameters are quite critical. Each of them need to be addressed and fulfilled by the borrower so as to fall under the automatic route of the Reserve Bank of India guidelines. Okay, coming on to eligible borrower and the recognized lender. What does eligible borrower mean? Eligible borrower means any resident in India. In fact, all the entities eligible to receive foreign direct investment. Foreign direct investment is nothing but the equity capital contribution by a non-resident into India. That is called foreign direct investment, which is governed by foreign direct investment policy guidelines, including various regulation defined by RBI. So all the entities who are eligible to receive the FDI are also eligible to receive external commercial borrowing. One important point what I would like to highlight here is, limited liability partnership are another form of the entities being recognized as the eligible entity to receive a foreign investment. Now, what does the LLP receive? LLP basically receive the capital investment, that is a foreign investment in a form of a capital contribution from a designated partner. So under foreign direct investment policy, it is being defined as foreign investment and not as a foreign direct FDI, but it is being defined as a capital contribution. Accordingly, LLPs will not be eligible to receive ECB, and this has also been clarified by Reserve Bank of India in their FAQ number 5. Having said so, there are other entities which are also eligible to raise the ECB. Those are Port Trust, Unit in SEZ, SIDB, Exim Bank, various registered not-for-profit company, registered society, cooperative society, etc. But the category E entities could receive the ECB only in a form of a INR. Having said so, what do you understand by the term recognized lender? So the recognized lender should be the resident of a FATF or a ISCO compliant country. FATF is nothing but a Financial Action Task Force, and ISCO is International Organization of Security Commission. So all the world securities, listed security regulators, they have a common pool which is being called as a ISCO, where the various policy with respect to financial stability of each of the country has been highlighted. The lender should be a resident of this 2 particular forum so as to avoid the aspect of money laundering or any kind of other fraud, etc., including on the transfer of the ECB. Additionally, there are also following recognized lender. Those are multilateral and regional financial institution. Individuals can also be permitted if they are the foreign equity holder or subscription to bond and debentures. Now, what does the foreign equity holder mean? Foreign equity holder will have 3 in fact category. Direct equity holder, that is non-resident, holding 25% equity shares in India. indirect equity holder, that is, say company A is a foreign company, it has an investment in company B to the extent of 100%. Company B is also a foreign company. Now company B is investing 51% in company C, that is Indian company. So in this scenario, company A can grant ECB to company C, the Indian entity, because there is an indirect equity capital of 51%. And even the group company with a common parent is also eligible to give ECB to the Indian company. In addition to that, foreign branches, subsidiaries of Indian bank can be allowed to give the ECB, but only in the terms of foreign currency and not in INR. So these are the recognized lender so far as ECB is concerned. Moving on to the next slide, minimum average maturity period. What is minimum average maturity period? Now any loan, when it is availed, it will have a particular duration. Generally, external commercial borrowing are the loan with a longer duration, because government would want that the Indian entity can avail the loan for a greenfield project from a long-term perspective and not for any limited purpose. So, to arrive at a minimum average maturity period, RBI has given an illustration including the formula, because it is very critical to adhere to minimum average maturity period for ECB currently, which is a 3 years. So let's move on to the illustration to understand what does the minimum average maturity period means. So any loan, when it is drawn under the loan agreement, there are different dates to draw the amount. Then there would be the date of repayment, as could be seen in column C. So column A is nothing but the date of drawal and the date of repayment. Column 2 is the date of drawal. Any company would want to draw the amount in a phased manner. Column C is nothing but the repayment of the original principal. And column 4 is the balance of column drawal and the repayment. Column 5 is the number of days of balance with the borrower. That is, the first date, the date of drawal, the date of repayment into 360 degree is the base date, base number of days which have to be considered. And column 6 is nothing but the multiplication of 4 and 5 divided by loan amount into 360 degree. So by deriving at this particular series of illustration, the ultimate average maturity in this case for a loan amount of 2 million is 3.281 years. Moving back to our original slide, so what the guideline says that? Guideline says that the minimum average maturity period has to be computed depending on different parameters of a loan in terms of date of drawal, date of repayment, etc. And this has to be 3 years. Call and put option, if any, will not be exercised prior to completion of the minimum average maturity period. So for example, if a total duration of a loan is 5 to 10 years, the minimum average maturity basis the computing is 3 years, then this has to be adhered. Before that, there cannot be any prepayment of any external commercial borrowing, or or any other kind of a change in the nomenclature of the ECB will not be possible. In addition to this, there are different categories of ECB right from A to E, where the minimum average maturity period varies from year 1 to year 10. Now what are those? As could be seen at serial number A, when ECB has been raised by the manufacturing company up to USD 50 million or its equivalent per financial year, in this case the minimum average maturity is 1 year. ECB when raised from a foreign equity holder for working capital purpose or general purpose, or for repayment of rupee loan. Repayment of rupee loan is nothing but many a times a company has to avail a domestic loan which is at a high interest, and subsequently they are able to get kind of a cheap loans from overseas by way of a ECB. So hence by availing the ECB they could repay the rupee loan. In such cases the minimum average maturity should be 5 years. Then if the ECB is raised for working capital or general corporate purpose from other than foreign equity holder or by NBFCs, NBFCs can lend this ECB taken for their general corporate purpose because they are into the business of lending. In that case, the minimum average maturity is 10 years. At number D, the ECB raised for repayment of rupee loan availed domestically for capital expenditure and on lending by NBFC for the same purpose, it would be 7 years. And at number E, ECB raised for repayment of rupee loan availed domestically for purpose other than capital expenditure or lending, it would be again 10 years. So this is what the overall scenario of minimum average maturity period is concerned. But just to share in nutshell, the base year are 3 years. Moving on to the next slide In terms of end use prescription, so what happened that whether ECB can be used for each and every purpose? The answer is no. There is a negative list being kind of listed by Reserve Bank of India into the regulation. What it says that the ECB proceeds which have been repatriated into India cannot be utilized for real estate activity. And what does real estate activity? That has also been defined under the guidelines. It means any buying or selling of the property or the land, with the core activity to earn an income out of this property dealing. If the loan is availed, it cannot be used for such kind of real estate activity. However, the real estate activity, this will not include within its gamut construction, development of instruction park, integrated township, purchase, long-term leasing, industrial park, new project, etc. They would be out of the real estate activity. Also, the investment in the capital market, will not be allowed. So, for example, if a company would have availed a ECB and say 60 to 70% has been utilized for its manufacturing purpose, can it utilize the 40% for investment in the capital market? The answer is no. Also, it cannot use the funds for any equity investment within India. And other than the clauses as mentioned in my earlier slide, working capital, general corporate and repayment of rupee loan, all these three could be availed only with the prescribed minimum average maturity period. Other than that, it cannot be used. Also, the on lending, as I said, the on lending is permissible by the NBFC and they have a separate set of regulation. So if the ECB is availed by NBFC, they can use it for on lending. Other than that, nobody can use it for the on lending purpose. There are other non-permissible utilization concept. It cannot be used for a contribution in a LLP, which we just saw at slide number 2. Many a time, what happened as one of the restriction is Indian company cannot make a equity investment domestically out of the ECB fund. To avoid such kind of structures, they try to acquire the goodwill in an indirect manner. So such kind of indirect equity investment to purchase of goodwill is also not permissible, including reimbursement of expenditure incurred in past, that is also not allowed. Also, one important factor here to highlight is many Indian company, there is a lot of potential they see outside India. So as to say now in the era of digital business, artificial intelligence, blockchain, etc., there is a huge market outside India. In such a case, the Indian company would want to try the offshore kind of a cross-border area to expand their business. In such a scenario, they can set up an entity abroad and the ECB proceed could be used for investment in overseas WOS or a JV. This particular investment is permissible under the ECB guideline. So having said with the end use prescription, moving on to the next slide, let's understand the all-in cost ceiling. Now, any loan, when it has been taken, it has a particular interest factor attached to it. As I highlighted earlier, that ECB, one of the attractive factor for this, that these are the cheaper loans compared to the domestic loan. And accordingly, there is a benchmark rate, which is being set by RBI. The maximum threshold rate, benchmark interest rate is 6-month LIBOR plus 450 basis spread. LIBOR is nothing but London Interbank offered rate, the rate at which between the two bankers the cost or the borrowings happen, that is a LIBOR rate. And this 6 months LIBOR keeps on changing day by day or weekly basis, and same can be obtained from the banker. So the threshold or the benchmark rate or the all-in cost ceiling for the ECB is 6 months LIBOR plus 450 basis spread. Now, what all components need to be considered into this 450 basis? Those are rate of interest, other fees, expenses, charges, guarantee fees, including ECA charges if any. So all these charges have to be clubbed and it cannot exceed 450 basis spread. There are specific exclusion from this. Those are commitment fees and withholding tax if required to be paid in the Indian rupee. So any interest, when paid overseas, there is a withholding angle that will be excluded from the all-in cost ceiling of 450 basis point. Many times so happen that there are various terms and conditions to the ECB. If at all particular terms and conditions are not fulfilled commercially, then there are penal interest. So what the guideline says that penal interest for default of any covenants, it should not be more than 2% over the contracted rate of interest. And one important point which has been clarified by RBI FAQ 21 is that this all-in cost ceiling should be applicable all the time. What does it mean? Say for example, a ECB is availed for 10 years. Then can one say that, in year 1, the interest payout would be 5%. In year 2, the interest payout would be 6%. In year 3, the interest payout would be 3%. And overall, as an average, my interest payout will not be more than 450 basis point. Will that be correct? The answer is no. RBI have very clearly clarified that the all-in cost ceiling threshold have to be met on a year-on-year basis all the time. It cannot be averaged out basis year 1, year 2, or year 3. So these are the provisions with respect to all-in cost ceiling. Moving on to the next slide in terms of what is the limit and the currency basis which the ECB could be availed. So the ECB can be availed up to USD 750 million per financial year, irrespective of the category of the borrower under the automatic route. And if the requirement is more by a particular Indian entity, an application could be made to Reserve Bank of India, which could be considered based on fact of each case. The currency ECB could be availed is either a freely convertible foreign currency or as well as an Indian rupee, depending on the requirement. Now, is there a change of currency of ECB once availed possible? So say, for example, initially the ECB would have been availed from US and in US dollar. Could be convertible into pound? Yes, the answer is yes. It could be converted depending on the beneficial to the Indian entity, and the rate at which it can be converted would be the date of agreement or at the lesser rate with the consent of the ECB lender. Similarly, the foreign currency ECB could be converted into INR, but converting INR loan into foreign currency is not permissible. So say, for example, if ECB is being availed in INR, it cannot be converted into foreign currency. This is not permissible. Moving on to the next slide, let's understand ECB liability equity ratio. What does it mean? As I said, any Indian entity would want to have a balanced balance sheet. It needs to have a mixed balance of equity as well as debt. So what happened that, say for example, a company A, which is a non-resident investor, would have invested a equity investment into India in company B. Now the company B also want to avail a debt, other than equity from the same investor. What would be the proportion in which it could be permissible under the ECB guideline? So what the guideline says that if foreign currency ECB is availed from a direct foreign equity holder, ratio cannot exceed 7:1. It means for every 100 rupee of equity, maximum ECB which can be availed from a direct foreign equity holder would be 700 rupees, not more than that. If at all, there is a situation that it is exceeding, again, an application will have to be made to the Reserve Bank of India, because 7:1 is a automatic route. Anything beyond that will fall under the approval route. Now, this particular ratio, is not applicable if the outstanding ECB is up to 5 million. Also, it so happens that many times the ECB is availed or can get spread over multiple years depending on the project requirement of the company. So it might so happen that, in year 1, a ECB has been availed and it is fulfilling the criteria of ECB equity ratio. Again, in year 5, because of some additional project or the new project, some additional ECB has to be availed under the new loan agreement. In such a case, for that fresh ECB, again the ECB liability has to be computed, and when computing the ECB liability ratio for the second loan, all the outstanding ECB has also need to be considered for deriving at 7:1 ratio. So the old ECB and the new ECB both has to be clubbed together to see the eligibility under 7:1 ratio for the second set or the fresh set of the ECB by the same company. Now, what does the equity include? Equity includes paid up capital plus free reserves, including proportionate share premium as per the latest audited balance sheet. Non-convertible preference shares cannot be included in the equity liability ratio. Now let's understand the parking of ECB proceeds. What happened that, once the ECB is availed, there is a gap between the ECB being availed by the company and the actual utilization of the ECB. So can the funds be parked, in the deposit or various other treasury bills, etc.? So what the guideline says that ECB for foreign currency expenditure can be parked abroad pending utilization, and it can be invested in liquid asset, that is certificate of deposit, treasury bill, deposit with foreign branch subsidiaries of Indian company abroad. And when ECB for rupee expenditure to be immediately repatriated to India. And in this case, if there is a gap between getting the credit of ECB and the actual utilization, same can be invested by way of a term deposit, but not for a period exceeding 12 months. If the period get exceeded beyond 12 months, it has to be shifted to the non-interest bearing account, because the ultimate logic and the foundation of getting the ECB is not to earn the interest income, but it has to be used for the greenfield projects, for the betterment of the country, etc. Moving on to the next slide, in terms of refinancing and conversion. What does the refinancing means? It so happens that many a time a particular company would have availed the ECB, and after a couple of years, depending on the changing economic scenario or various other geopolitical factor, better terms of ECB is also available. So say for example, if a company A would have availed ECB at an interest of say 450 basis point, and after a couple of years, they are also in talks or discussion with other non-resident lenders wherein they are willing to offer the ECB at a rate of 350 basis point, depending on the potential of the business of the Indian company. In such a case, the guideline says that the old ECB can be refinanced by way of raising a fresh ECB, but there are certain conditions attached to it. Now, what are those conditions? The minimum average maturity, which we just discussed earlier, there should not be any reduction because of this shifting of old ECB by way of a fresh ECB. The all-in cost ceiling has to be lower than the all-in cost of the existing ECB, and the fresh ECB is not availed from the overseas branch subsidiary of the Indian bank. And any refinancing of the INR ECB with foreign currency ECB is also not permitted. The way conversion of INR into foreign currency is not allowed, similarly refinancing of a INR ECB cannot be done with the foreign currency ECB. With respect to conversion of ECB into equity, let's take a scenario where an Indian company would have availed the ECB, and consider a situation of COVID. Many of the projects are stalled, or they would have not got effective the way it should have gone, thus resulting into huge loss to Indian company. And because of the losses, what happened that they are not able to make a repayment of interest, including the principal amount. So what are the options available? In such cases, all the outstanding ECB could be converted into equity share capital, including interest, and the guidelines which have to be fulfilled are the foreign direct investment guideline, because here the non-resident lender now will step into the shoe of the equity investor. Accordingly, foreign direct investment policies and guidelines have to be adhered in terms of sectorial remit, in terms of automatic route, and various other factors like pricing guidelines, etc. So the conversion is possible from ECB to equity. However, separate set of guidelines of FDI policy have also need to be looked into. Again, there has to be a consent of other lender, and the exchange rate at which it could be converted is a date of agreement or any lesser rate with the mutual concern. And as I highlighted earlier, the conversion is not only for the principal amount, it could also be for the ECB interest, depending on the applicable, subject to applicable conditions, etc. Moving on to the next slide. Now, can any loan, when we talk about any loan, be it commercial, personal, always there is an underlying security or a charge. Similarly, for ECB, the non-resident lender would want to have a security or a charge on movable or immovable assets of an Indian company. So what the guideline says that Indian company is allowed for a creation of a charge on immovable property or a movable asset. However, say for example, if this particular charge has to be evoked or has to be enforced for any default and any payment, in that case, there are separate guidelines of immovable property and movable asset under foreign exchange rules. All those guidelines have to be adhered if this particular enforcement or evocation has to be done. So the security and the charge could be created, but at the time of evocation, respective guidelines provision have to be adhered to. Similarly, there could be creation of charges over the financial security of the Indian company. What does it mean that in terms of financial security? Many Indian company would have a subsidiary in India or outside India. So the charge, the shares in the subsidiary could be pledged to the lender of the ECB, and at the time of evocation or at the time of enforcement of this charge for any default, same has to be in accordance with the foreign direct investment guidelines, because here also the lender will step into the shoe of a equity investment considering the pledge of the shares. Accordingly, the corresponding guidelines have to be looked into. So in nutshell, what the guideline says that security creation of charge is possible, but at a later point in time, when actual evocation happens, respective guidelines have to be adhered into. Moving on to the next slide. In addition to security, many times, the lender would want a two-layer of security. One is in a form of a security, and second would be in a form of a guarantee. So the Indian corporate can issue either a personal guarantee or a corporate guarantee, subject to the loan agreement terms and condition, and there has to be a necessary board resolution with respect to such guarantee. Also, there are guarantee regulation, which is also a kind of a capital account transaction. So when a guarantee is issued, be it a personal or a corporate, this has to be in accordance with the guarantee regulation of Foreign Exchange Management Act. Now, important point what I would like to highlight, that Indian bank, so-called authorized dealer, or any financial institutions like NBFCs, etc., they are not allowed to give any guarantee for this ECB, because there would be kind of a double leverage. Already the loan has been taken. The guarantee has to be basis the appetite of the Indian company. It cannot take a recourse to the banker to avail a loan. And hence, Indian bankers are not allowed to give any kind of a guarantee. Also, the Indian financial intermediaries like bank, NBFC, etc., cannot invest in FCCB and FCEB in any manner. And at the time of evocation of the guarantee, as highlighted earlier, respective guarantee regulation need to be looked into. Moving on to the next slide, what is important in terms of reporting requirement? So when a ECB is being obtained, it could be under automatic route or it could be under approval route. In both this route, there are reporting requirements which need to be adhered with all the accurate data. And all this reporting now are in an online mode. Everything has to be done through the AD Bank, which gets uploaded on the RBI website. And they actually monitor it very closely. And in case of any default or in case of any mismatch, there are stringent penalties attached to it. So what are the different reporting requirements? The first important form is Form ECB, earlier called as Form 83. So when an ECB has to be availed, borrower is required to file Form ECB in duplicate with the bankers, and the bankers will forward it to the Director Balance of Payment, RBI. Once this has been filed, and it has been scrutinized, they will issue a loan registration number. This loan registration number is very important, because basis this number has to be quoted in all the future communication to obtain the loan or the ECB if the drawdown is spread over number of years. Many a time, after availing the ECB, there could be changes in terms and condition. So for each change in terms and condition, there has to be a revised from ECB. So this particular changes also need to be reflected on the RBI portal or a website, so that there is no mismatch. And this revised form ECB should be submitted with DSIN within 7 days of such changes. Then there are monthly filings. Monthly filings are ongoing filing, which has to be done month on month in the form of ECB2 with the AD Bank, so as to reach to DSMI within 7 days from the close of month. Monthly file is nothing but to supervise, that whether all the parameters has been fulfilled in terms of end use, in terms of minimum maturity, all in cost, whether they have been adhered on a timely basis, which gets monitored by RBI through this monthly filing. We spoke about conversion of ECB into equity. In such a scenario, there are two sets of filing which need to be done, either for a partial conversion or a full conversion. So one filing would be in a form of a ECB2, saying that the ECB now has been partially converted into equity, and other filing is called Form FCGPR. This form is nothing but as laid down under Foreign Direct Investment Guideline, because the loan has now partially been converted into equity. Accordingly, that also need to be reported in the system. Similarly, in the full conversion, two sets of form, ECB2 and FCGPR, and there has to be a clear mention saying that ECB is fully converted into equity. And for each conversion of ECB into equity, monthly reporting thereafter will continue when only partial amount has been converted into equity. And why this reporting requirement are very important, because moment if AD Bank finds out that any particular reporting is not done in time, they might be reluctant or they might be quite rigid in processing any other future cross-border transaction. So it is very important and particular to have an efficient, accurate filing being done through the bankers. Now, this is a late submission fee. This is a new concept introduced in the notification of December 18, which was not the case earlier. Under foreign exchange management, what happens in the case of any default, the penalty, maximum penalty is 3 times the amount involved. Now, this penalty doesn't get levied, unless there are cases of fraud or intentional violation, etc. So there is a process of compounding. What happened that in case there is a default of any of the provisions of the FEMA, the particular transaction gets compounded. Now, depending on the what happened that RBI used to get so many compounding applications, so they actually through kind of a statistics found out that majority of the default is on account of delay in filing the form, and hence to come out of this, to save on time, money, etc., what they have decided to come out with a concept of late submission fee. So it says that in case if there is a delay in reporting of any form or submission in any form, you pay a particular fee has been prescribed, and after payment you do the respective filing rather than going through the compounding route. And this concept is very similar to what is there under the Companies Act, where you pay the filing fees and then you do the respective filing. So in the ECB, the applicable late submission fees are with respect to form ECB2, depending on the period of delay, it is 5,000 and maximum ranging it to INR 1 lakh per year. And it is very important, better to pay the late submission fee, do all the filings. In case if this has been avoided, then it will lead to further contravention and shall be subject to compounding or adjudication as provided under FEMA. So this is a kind of a welcome step by RBI to avoid any delay in compliance reporting past delay. Now, as I highlighted, in the earlier slide, that RBI focuses more on the policy matter, macroeconomic matter, and all other aspect in terms of administrative compliances procedure has been delegated to authorized banker. And we also discussed that various terms and condition of ECB could be changed over the period of the year. So what happens in such case? Do we need to go to RBI for the change in terms and condition? The answer is the powers have been delegated to bankers, and most of the change in terms and condition or the parameters of the ECB can be approved by the banker. And what are those? Those could be change or modification in the drawdown or a repayment schedule, change in currency of the borrowing, change in the name of the borrower, change in the name of the lender. Considering the evolving world, there could be reorganization, merger, demerger. So there could be transfer of ECB from company A to company B, reduction in the amount of ECB. Everything could be managed at the AD level because the powers have been dedicated to AD Bank. This is again a welcome step, because initially for each and every change, you have to knock the doors of RBI, which is a quite time consuming process. But with this powers being delegated in all these scenarios, it is much smoother and swift process. And while doing so, respective change forms, if required, need to be filed within 7 days of carrying out the changes. And all the other kind of ECB guidelines need to be complied with when there are this changes being undertaken. Now, let's understand the process of startup. So, the ECB, with respect to ECB, there is a special dispensation for the startup. What are startup? Startup as defined by the central government, which is also applicable under Income Tax Act. The turnover should not be more than 100 crore in a financial year, and it should not be more than 10-year old from the date of incorporation. So to give the boost to Make in India and to give lot of kind of boost to the startup, the ECB guideline says that, or there is a kind of a dispensation in 3 areas. One is there is no all-in cost kind of a ceiling. It could be mutually agreed between the borrower and the lender. As we just saw that for other borrowings it is generally 450 basis point plus LIBOR. Here it is mutually agreed between the borrower and the lender. The limit for the startup remain constant, which is USD 3 million per financial year, and the ECB liability ratio, that is the debt liability ratio, is not applicable in the case of ECB for the startups. All other terminology or the parameter in terms of recognized lender and use currency conversion, security and guarantee are same as it is there for the other loan. The dispensation is with respect to all-in cost ceiling, minimum maturity and the ECB liability ratio. This is just to give an added advantage to the startup for expanding their business or carrying out any new activity. Now, what is the trade credit? Trade credit is also a part of ECB and this is also governed by the ECB guidelines. Trade credit is nothing but refers to the credit extended directly by overseas supplier, bank and financial institution, and the maturity period is up to 3 years. So these are more, when there is any import of capital or non-capital goods into India, the trade credit generally is by way of a supplier credit or the buyer's credit. And this also has two route, automatic route or approval route. So when the authorized banker, approve the trade credit for import of a capital or non-capital good up to USD 50 million in a per financial year or per import transaction, it falls under automatic route. And when it exceeds 50 million for capital or non-capital good, it falls under the approval route. This will also have parameters in terms of maturity. So in the case of import of non-capital goods, the credit could be extended for 1 year from the date of shipment or operating cycle, whichever is less. In the case of import of capital goods, up to 3 years from the date of shipment. And again, there are set of reporting to be done, monthly reporting in form TC with the bankers, not later than 10th of the following month. In addition to that, there are quarterly reporting if at all any guarantee or anything is being aligned to it. In terms of all-in cost ceiling, the threshold is 250 basis point plus 6-month LIBOR. And all banks, the important point here are the banks are permitted to issue the guarantee in the favor of overseas supplier, bank or financial institution. In the earlier phase, we saw that for the ECB long-term loan, bank cannot give any guarantee. Guarantee could be given only by the resident company or its promoter. However, this term credit, trade credit, being a short-term loan and for a short-term time, guarantee could be given by the banker in the favor of suppliers, etc. So this is too functional, the current import-export kind of a transaction, and these are the benefits aligned to it, which also fall under the ECB guideline. Now let's understand what are the selected ECB issue. What happened that, as I highlighted that all these 7 parameters has to be fulfilled. Otherwise, the Indian resident will not be eligible to avail the ECB. So in past, what had happened that many companies used to have indirect structures. So what they used to do, if an Indian company is not able to avail a ECB, they used to form a overseas subsidiary, and the overseas subsidiary used to get the funds or the access to the overseas market, and then the subsidiary used to route back or channel back the money into India. So it's kind of an indirect round tripping, what they call, wherein the Indian company, when directly they are not allowed to have a ECB, they used to form an indirect structure and get the ECB from their overseas arm. Such a situation is not allowed. RBI have clarified this by way of a circular 41 of November 14, where they have said that fund raised overseas by any Indian entity with support from Indian company and AD bank cannot be used in India. So such kind of indirect structure where direct funding is not possible will not be allowed, and strict penal action for violation would be taken. So this has to be borne in mind. Also, if we see the statistics of the compounding, what are the transaction in past which has been compounded by RBI before the late submission fees, etc. And those are with respect to end use not complied, eligible lender condition not complied, loans from unrecognized borrower, minimum average maturity period has not been compliant, ECB compliance not been undertaken. So all these items have been compounded, and a complete list of all these orders, including the statistics, is there on the RBI website. So transparently, it is available on the public domain. Anybody who would want to wish to see, what kind of transactions or what kind of actions has been taken, everything is available on the RBI website. Also, many times it so happened that there is a concept of deemed ECB. So generally, when a Indian resident makes an import, the payable have to be done within a prescribed time, that is 6 months or so. If the payment is not done within 6 months and it extends beyond 3 years, this is nothing but a deemed ECB. Similarly, there are other current account payable in the form of a royalty, FTS. If they are not paid within 6 months and it extends beyond 3 years, this is nothing but a deemed ECB. Again, there could be a scenario where export advances would have been received by the Indian company, but there is no underlying export of goods or services, and this is pending long for to be refunded. All this aspect is nothing but a deemed ECB. This have also been compounded by Reserve Bank of India, depending on the fact of the case, etc. So with this, I complete my session. I think I'm well on time, and I would like to take questions over to the organizers.
Thank you, Darshana. Quite a excellent coverage, I must say, on the whole subject. Mishra ji, any questions? Let me also recognize presence of CA Umesh Sharma, Regional Council member. He was the Vice Chairman last year.
Good afternoon.
Good afternoon. So, Darshana, questions get typed. Mishra ji will start showing it to us.
Sure.
So, Darshana, the first question.
Yeah. So the first question is whether ECB2 needs to be done even if there is no new ECB transaction. The answer is yes. Even if there is no new ECB transaction, a nil ECB2 return has to be filed. This has also been clarified in RBI FAQ. Moving on to question number 2, whether expenses paid by parent due to non-opening of bank account of Indian subsidiary be considered as a ECB. Now this again depend, what are the kind of expenditure? Is it something a routine or a quite important expenditure which is small in quantum, and later on it has been decided to be reimbursed back by the Indian company? In such a scenario, the guidelines have been given to the AD bank, and if the transaction is small, one-off, this could be dealt discussing with the AD bank, and it should not be considered as a ECB.
मिश्रा जी, तो वर्ड डॉक्यूमेंट में फुटर आपका चालू हो गया है, फुटर में पेस्ट हो रहा है, तो थोड़ा सेंट्रल करिए उसको.
Yeah, it's better. Okay, the question 3 is whether rent deposit for India sub office paid by parent be considered as a ECB. This is again same as question number 2, where I understand that because of unavoidable circumstances, the payment including rent deposit, if it is not paid by Indian subsidiary and paid by parent, again this, if there are commercial difficulty or genuine difficulty, this will not be considered as ECB, but same has to be kind of rectified, or the deposit need to be reimbursed back to the parent, and it should not be kept outstanding for a period more than a year or so.
Any other questions from anyone here?
I think if a non-resident director is paying certain expenditure, creditor, on behalf of Indian company, will that be considered as a ECB? The answer here is, in fact, the non-resident director in his personal capacity should not make any payment for on behalf of the Indian company. Not only the ECB, this is the violation of a normal FEMA regulation where on behalf payment is not allowed. So this cannot be done by the director in his personal capacity. Okay. Whether company is supposed to file any return for trade credit transaction for capital import? Yes, it's there on my slide. As I mentioned, there is a TC form which needs to be filed for capital goods. Same has to be filed with AD Bank and it will get reported further to the RBI. I think considering the essence of time, I think any other questions or further questions could be sent to me or email it to me, and I would be happy to address it and share with WRC, and same can be uploaded.
Sure. Thank you very much. So, with that, let me also recognize presence of Regional Council Member Preeti Saula, and I think Regional Council Member Balkishan Agarwal is also there, joined us. And now, Umesh bhai, over to you for a very valued vote of thanks for this session.
Yes, good afternoon to all. And let me put before you the vote of thanks in the fashion that Darshana Jain Madam has dealt with the subject. The name of the subject is Overview of ECB. Now, ECB means extra commercial borrowing. But for giving vote of thanks, what is mean by ECB? To Speaker Madam, I will elaborate in this fashion. Extraordinary knowledge of the subject, that is E. And C, crisp and clear understanding of issues, because in your presentation you have dealt with the issues, so crisp and clear. Then B, brainy and beneficial solutions. You have given the solutions which are beneficial to the participants, that what to be done in the COVID situation. If the ECB is not there, then you can convert into equity, but with the writers. So these are the beneficial solutions which are given by you. So thanks for ECB lecture on the topic of ECB.
Thank you, sir. In fact, it is my honor to have a new definition of ECB. It's a learning for me as well.
Yes,
thanks a lot for the kind
and
word.
thanks to Murtuza for organizing such a wonderful lecture.
Yeah. Thank you, Rituja sir. As well.
Yeah, thank you. And with that, we close the second session and we move on to the third session. And third session is also equally interesting. Bhavin Parekh is the learner speaker. Bhavin, I would request you to switch on your camera as well, so that we can see you, participants can see you. And Bhavin is going to cover the risk in 2020. And with COVID, the risk subject itself, the whole definition of risk and the list of risk has gone through a tremendous change. And Bhavin is going to cover all the risk today. So I think Umesh bhai, I would once again request you to introduce Bhavin. Over to you, Umesh bhai.
Yes, good afternoon, Bhavin Parekh ji. Sir, for your introduction, when I was going through the biodata, it's very important to note and share with all participants that it's a one paragraph biodata covering the vast experience of 11 years of Bhavin Parekh ji in the internal audit and management consultancy, and currently working with Hinduja Global Solutions, previously associated with JM Bakshi Group, Aneja Associates and Hari Bhakti Associates, with a wide exposure of the subject and business process management, shipping, power, life insurance, media, and FMGC, to name a few. So let me present before you Bhavin Parekh, one of the master in this area, and the subject given is risk 2020. So जैसे 2020 क्रिकेट अभी फेमस है और अभी ये 2020 ईयर है which has come with the COVID. So what are the risks in playing in 2020? Bhavin Parekh ji will tell us, and I request Mishra ji to throw some light on the face of sir as a speaker, or sir, can you adjust light?
So Bhavin,
yes sir,
if you have a light in front of you, थोड़ा सा, या अगर आप अपना पोजीशन चेंज करें तो आपके सामने से लाइट होना चाहिए, कंप्यूटर के सामने से अगर लाइट है, इट विल हेल्प.
या मैं एक सजेशन दूं मुर्तजा भाई.
हाँ बोलिए.
भाविन पारिक जी, अपना मोबाइल का फ्लैश लाइट ऑन करो.
ओके.
टॉर्च. और
तो भी चलेगा.
यस, उसको उल्टा अपने सामने रख लो.
बस.
ओके.
उसको उल्टा करके अपने सामने रख लो.
एक तकिया या कुछ रख के उसके ऊपर वो मोबाइल रख देंगे तो उसका लाइट आपके चेहरे पे आएगा. यू विल बी वेरी क्लियर. हाँ.
Is it fine now?
Still
Can we
it
start?
is not visible.
Okay.
Sir,
Now it
बाकी
is
लाइट
visible.
रूम्स
भाविन
के
सर पीछे
बाकी
का
लाइट
पर्दा बंद, भाविन सर पीछे का पर्दा बंद कर दीजिए, उसका व्हाइट वहां से आ रहा है, इसलिए आपको प्लस फेस ब्लैक दिख रहा है।
और बाकी लाइट्स भी चालू कर दो रूम के।
Okay. हाँ चालू है सर. Is it fine now? Let's start.
Yeah, you can start. That is okay. We don't
Okay.
have a problem. Chalo. ठीक है. No worries.
Okay.
Umesh bhai, thank you
Good
very much.
afternoon to all. Thank you, Mr. Hello.
Yes.
Hello.
Yes, Bhavin.
So
Start
good
करिए, भाविन सर
afternoon to
start
one and all. Okay. Good afternoon to one and all. At the outside, I wanted to thanks to WIRC Chairman CA Lalit Bajaj ji, Vice Chairman Vishal Doshi ji, and Secretary CA Muttuza, and everybody, including all the panelists, CA Umesh Sharma, Preeti Madam, and all the WIRC team for organizing such a wonderful webinar for almost a month, which has enlightened me on various topics ranging from income tax to data analyticals, which has equipped us to be more agile so that we can help the management in this unprecedented event. During this period, I just wanted to thanks to everyone. I can proudly say each day of myself would be considered as an edge. So what is an edge? I just wanted to reframe it before starting the session, that every day great e-learning, which has WRC has provided and sharpened our skills myself, so I can face the future with more confidence enough with respect to all the areas of the management which can help the internal auditor and the management facing the problem. So now let's start my presentation, my view on risk 2020. It is also known as an emerging risk, which has unprecedented event which has been already happened, where every element of the business, ranging from robustness of supply chain to the stability of the financial markets, the availability of the labor force, which has threatened up the weakening of the consumer demand. So now, what are the topics to be covered in today's scenario? What would be the role of an internal auditor? That is repurposing the role of internal auditor, proactively risk management, and challenges to navigate before the profession. That is to highlight, understand what are the emerging risks. We always call as an internal auditor has to be a very risk agile. Agile, it's very simple to say you are a risk agile, but in a simple terms it means it has to be move quickly and easily. So whether the internal auditor is geared up to move to the changing scenario easily, whether he is able to cope up with the management operational resiliency and help the management in this scenario. So during this period of almost risk 2020, what I selected is almost 3 months has been passed. So up to December, if all the companies, all the business, if they are able to survive, then definitely he is able to cope up with the COVID-19. Now, so in this crisis, time of the crisis, we as an internal auditor has to repurpose ourselves, means change ourselves the role what we are playing it earlier, right? Because of the changing in the operational resiliency. Now, what do you mean by operational resiliency? An enterprise that adapts and flourish in this changing world. The operations that combines the agility, flexibility, foresight, and robustness as a plan of continuity management. Now, repurposing, what I said it is to adapt for use for a different purpose, the role of internal auditor. Now, so during this period of 3 months, 4 months, if we are already doing a desktop audit, then it is fine. Otherwise, the more important critical transaction you can able to cover up during this phase, like master data changes, logs of all the system has to be analyzed by the internal auditor due to the cyber security risk, sensitive access, incident monitoring, service level agreement for all the critical vendors, emergency procurement during the lockdown, and identifying the risk that mitigates the same. Now, so what I wanted to say that during this period of desktop audit, other than doing an audit, we need to change our role so as to help the management so that they can able to track all the crude. So what is the crude? Is create, read, update, delete. So that is the crude activities in all the identity and access management. So we can able to identify is there is any gap or is there is any robustness of backups has been created if there is any ransomware attacks has been done. So during this phase, what I wanted to say that all the access which has been given to all the personals, including the IT, top management, all the sensitive access, that has to be monitored. Incident monitoring has to be monitored by someone independent from the management perspective. That is, I call myself as a crew. That is, if there is any create in the master database, read, update, any deletion of the activities in the identity and the access management. So this I force with the repurposing the role of an internal auditor. Now, since I earlier said that operational has to be a resilience during this period, they have to change their strategy the way they were doing it earlier. Earlier we were saying as a VUCA world. Today is scenario which has event which has already been happened called as a VUCA. Now all organizations are changing themselves to require the need of the current present scenario of the consumer. Why? The consumer demand will become very punishable, like will reduce it because of the low income of the people. To give you a simple example, like in an FMCG for shampoo, 60% of the shampoos are sold in a sachet, and this are being purchased by the low income group. Now this low income group will definitely during this period won't be purchasing a shampoo for almost all the 7 days. So the marketing agent or an operational person has to revise their marketing plan so as to ensure it that the strategies will follow different, right? They can reduce the cost. If suppose a sachet patches is costing 3 rupees, now they can able to mix up to on a lower side and they can able to market the capitalization. Now how can internal auditor can help the organization to look forward in this scenario? By providing an independent objective voice to the management in their decision making. Like I give you a recent example. If an organization wanted to launch a new product, like FMCG has launched dozen of hygiene products during this COVID-19, and also give you an example of Amul Haldi milk, which has been launched during this COVID period as an immunizer. But they have not considered the consumer experience, and the production has been started on a massive scale. So this has to be pointed out by the internal auditor during the meeting. What would be the risk if this product would get failed? Whether the consumer experience has been done, whether this all procedures before launching the product has been done it. If not, then what are the mitigation plan the organization does it? Like although the lockdown period said in a green zone has been ended, but currently it is not ended, right? Like in today's newspaper like Samsung and various other industries, they have not got a green node for all the uh, pan India industry location. So what they will do is, if whichever in state where the industry lockdown has been open, like for an example in Pepsi, where they work in a different states, Punjab, Kolkata. So if in Kolkata it is not resumed, so what they will ensure it, okay, they will do it Punjab reproduction of 24/7 for an FMCG, because if you consider the dairy products has increased rather than an ice cream product in the month of May, where the ice cream has been reduced. but all the FMCG products wanted to increase their sales during this COVID-19, like grofers and everybody has increased double their sales. So what they will do, all the manufacturers work the factory plant 24/7, but they don't look after whether the material maintenance department are taken into board, whether my plant efficiency is there to work on a double shift. So that has to be considered during this operational resilience plan. And what is the second point which I have written? Evaluating the design of new controls or an amendment controls prior to implement the result of changing the working environment. So since the work environment has been changed, like work from home model for a service industry, various regulatory guidelines has been issued, you have to amend the controls. You cannot stick down with the past old controls, like you have to change. Although the lockdown has been ended in few parts of the country, but still there is exists a risk of asymptomatic patients. So what is an asymptomatic patient? Is there a patient who have been exposed to an illness or sick but doesn't have any symptoms of this? Like in Maharashtra, 83% of COVID-19 are asymptomatic patients. This as per the 2nd March 20 data, that in Maharashtra of the total COVID-19 patient, 83% are asymptomatic patients. So here is the risk that as of now, all the organization in today's newspaper has also been mentioned that asymptomatic rapid action test cannot be done by ICMR. Why? Because of the failing duty. And the reason they cannot do it, also RT-PCR test, because of the cost expensive. So now they have written to ICMR how we can able to start the production, because only the temperature as of now, thermal temperature body is been done. ICMR cannot accepting a rapid antibody test. So how? Because all the organization has a workforce which is very important to them. So the safety measures is utmost important. So everybody have raised, all the organization has written to ICMR that what are the risks which are been there, how to able to use this, because RT-PCR test is very expensive. Rapid antibody test, they cannot do it because of the problem of testing purpose. So how they can able to roster the person, how this process can be done it. So this has to be thought for the day. Is there a SOP has already been prepared? Hope all the internal auditors in every organization as of now has today prepared an SOP to be resumed after the lockdown period, but whether they are monitoring the same. And also I would like to tell about various chambers of commerce and industries has also readily provided SOPs to the manufacturing unit. Although some relaxation has been given by the government in their recent guidelines, like 1 hour break between the shift can be break up, sanitization is not mandatory, but this all the person has to be a company organization to provide a safety to the employees has to be taken into consideration. Moving to the next slide. What are the factors for an agile internal auditor? What I say that as agile is today a scenario that you need to move quickly and very easily. So how you can move it very easily? Only when you have done it prior, right? If you only have an edge towards your peers by upskilling yourself in today's scenario, then only you can able to guide to the management, guide to the role of various function, and this can be the process, like previous speaker that CA Darshana Jain has rightly said, the ECP, because the capital market borrowing, which will come in the financial risk, which all has enlightened. So today in this VUCA world, we were saying in VUCA world, that is volatility, uncertainty, complexity, and ambiguity. Auditors need to be abreast with all the latest amendments and all the regulators guidelines to the regulators and implement, modify the existing management controls according to the functions of the organization. Now, few examples which I wanted to make sure during this period, or updating the ICFR as on 31st March 20 requires an additional controls to be evaluated, like work from home policy. What would be the policy, and it would be the next set of the business as usual for an organization, like various industries. I'm saying a BPM industries now they are planning to use as a work from home policy, and the topmost India's exporter TCS has also been done at 25-75 ratio. That is 75% of the work of the employees would be working from home. This would be the next step. And they are mentioning in their master level agreement that this set of the person will be working from home, because in BPM industry, there is a client control that they have to be specifically to that particular location. They cannot work from anywhere. So now this would be as business as usual work from home policy. Now we also need to be taken into consideration whether all the various benefits received by government, whether the organization has been availed. Companies are also given the benefit. The government from the side, I will say, the PF contribution, which the government has said for 3 months of the PF contribution of both for an employer and an employee would be funded by the government, but there are certain conditions, like if the employees are earning less than 50,000 and up to 100 employees, and after 100 employees, 90% of such employees earning monthly wage should be less than 15,000. So this only in that scenario PF contribution will get benefit. That TVS Motors and announced warranty extension and service support between March to April is extended up to 30th June. Thereby, there should be a reassessment of provision in the books of accounts. Thereby, doing a desktop audit, like in today's scenario, if we would be doing an accounts audit, function audit. So this all the parameters has to be considered by an internal auditor. To be more important, if there is any donation has been given to a PM case, since it qualifies the ordinance which was passed on 31st March, if the payment is made up to 30th June, then the benefit can be happen, right? But as per the guidance note of CSR, liability is to be recognized only on binding of the contract. So binding of the contracts, if you have done 31st March, then various other incentives which the government has given, like GST refund allowed for cancellation of any event, then GST refund you can able to do it. Now, before going to another slide, let me ask you some few questions. Respect for the rest. All participants over here, which I can able to say almost as of now 249 participants are there. Is your email account has been hacked? How would you come to know? Or your Facebook account has been hacked? How you can able to view it? Is there an app available readily to do it for you? In today's scenario, you have all done as a Google search. So in Google, your cookies are already saved. So is there an application which is available with you all guys to be more agile, because you need to be more agile rather than your peers, right? So is there an app which you are aware of where where you can protect yourself rather than your peers? Are any questions, any answers for that? I will let you know. It is not a cyber security, but how you are much more agile to your peers. Like the app name is Jumbo app. If all can able to download it right now, you can do it. Excellent app, which also downloaded right now. Prior, you can able to view is any of your email account has been hacked prior, whether it is available in the darknet. Hope darknet, internet, you can Google it. Is there how you can make your passwords to be two-factor authentication, your Facebook, your personal accounts? So this are the most important in today's world. Why? I would be telling there is also a slide of cyber security. Next, I will tell you it is utmost best. You need to be safeguard yourself. So before going into more insight, stay tuned with respect to the another slides. Now, so I've considered the next is the impact of COVID on 19 industries. This 19 industries, if you see the severe sector like transport, tourism, this all consider only 19 sector. Labor industry sectors have not been considered over here if you see in it, because there are n number of the industries which has been also impacted. So here if you see it, it is not mentioned: rent, real estate, garments industry, power loom, handicraft industry. So if we consider in the Maharashtra itself, as of now, with respect to, of the 2.4 million power looms, Maharashtra only has 1.3 million. So approximately 55% of the power looms in India, it is only in Maharashtra city alone. So of this 55%, 70% are small units, which they employ 8 to 12 workers, the garment industry, which as of now the scenario is that they cannot pay the salary. So how you can able to help them, how you can able to move forward? Like I will say the transport sector, if you are aware of the tourism sector in India, Ministry of Tourism has launched Dekho App Desh, a webinar series which has been hosted by various experts who will share the information of various destinations like Pondicherry, Ladakh, Kolkata, Lucknow, and this would be a VR technology. This has also been used by the Egyptian. And if we see our hospitality industry, what their hotel chains have done it, like ITC, Redison Hotel Group, they are serving the customers like live cooking sessions with their master chef, so as to keep patronage with the all the consumers. So after the COVID-19 impact, the automation would be the key with respect to all the industries, how you can upskill yourself. So we also need to check the next wavelength of the technology, that is VR and AR. Technology would be also in line. Now, I will come to emerging risk for an internal auditor to be considered. If your audit committee has already been, you have already proposed in the month of March, the audit schedule for the financial year 2021. Either it has been already passed, or still if the audit committee has not been done, so you need to revisit your audit plan, because this 3 months or next 5 months up to this financial year, if you are done any operational audit, then you need to revisit, you need to consider all the desktop audits. And during this period, what I said is you can prepare an SOP, you can repurpose all the important areas where the management could be having a cyber security risk. The most important risk, and this all the risk is very generic purpose. It will differ from the business model, right? This would not be the same for all the business, but I consider a very generic, like a financial risk would be very much important for all the industry. Cyber security. So I've noted down the 8 important emerging risks which an internal auditor has to be considered during the financial year 2020 only. Financial risk, cyber security risk, third party risk, compliance and regulatory burden, digitalization and business model disruption, business continuity management, geopolitical risk, human capital, the organization for future. Now, financial risk. I will go to the next slide, that is the financial risk. So as of now, everybody is aware of that there is a financial risk to each and every organization. Now, the nature of the financial risks, which I earlier said, it depends on the sector, business model in question, managing and also managing various stakeholders' expectation is very difficult to forecast. Like working capital management, revenue forecast, credit risk is very difficult in today's world. Like if you see it, WNS, Wipro, all the revenue guidelines has been withdrawn for the financial year 2021 because of the uncertainty. So it is very difficult to forecast the working capital management. If you see, various companies during this period has already locked down, but there also a risk, which I said it. before moving, I just miss out the liquidity management, the credit risk, the revenue and the cost management also has to be taken into consideration, which lead to reducing demand, cause of depression of the net revenue. Now, and the market risk capital management. So during this period, various organization has closed down their working. Like to give an example, a clear score, which is a rating app, has been closed from 30th April 2020 because of the inability of having a working capital management. So since in India, there is already an implementation of National Disaster Management Act. So sacking of an employee during this pandemic scenario could also be considered as a legality risk, where you two lawyers from in Pune have already sued the organization that they cannot terminate the employees. So there could be also a risk of terminating the employees. So you need to be take care with respect to the legal team of your organization, whether you can able to terminate the employees. IPL recently, the IPL, the 2020 has all cancelled till infinite due to this unprecedented event. Thereby, there is a huge amount of the loss to the sponsors, to the team player, and there is a huge amount of the loss which they have had. But if you see the All England, the Wimbledon tournament has already taken this pandemic insurance of 2 billion. And due to this, they are, since they are already taken an insurance, they would be receiving half of the amount of the loss, that is 141 million they would be receiving due to loss of this pandemic, due to the cancellation of this event. So what would be the question for an internal auditor at this junction of the time to look after it? That is, there is any sufficient evidence support that the working capital is being managed properly so as to free up the financial resources for various expenditure? How mature is the company financial risk management? Is there is any assurance being provided for properly efficiency of the financial controls? Whether the organization during this period has considered various government incentives, schemes, subsidy to provide the physical support, as well as another organization also has to consider the long-term implementation of that support. To give you a recent example of moratorium, all the organizations, so all the banks have also taken into consider the provision of the moratorium, that they consider it that although the organization has availed the exemption of moratorium, but still there exists a risk that they cannot get the amount, of the interest. How? Because the reason is that their balance sheet already reflect huge amount of the cash in their bank balance, but all they have availed at the day end, they have to forego their interest provision. So you need to properly understand the risk implementation of the moratorium. If you are already having it, since you would be doing it, a more amount of the risk. So first it goes with the financial risk. There is an impact of valuation due to the COVID-19. Like in the month of March, almost half of the Nifty 50 stocks are trading at the single digit valuation. Over 50 stocks with a market capitalization of more than 10,000 crores traded below 2018. For the 20 years low and a single digit P, the stocks are worth at the low, which is already there with the 80 March 20. If you see it, 80% of the Nifty stock hit their bottom 52-week low. This has been changed, and today's market almost down by 2,000 points. So there is a huge amount of the valuation change. So what the regulators, the government has done it. The government has indirectly stopped the FDI route. That any of the land border countries, including in India, they need to take prior approval for investing in a company. So SEBI during this period has come out with a various excellent regulations, like they have extended the regulatory approvals for IPO right issues by more than 6 months, raised the threshold limit. So all this company, those who are financially stable, but because of the valuation, they can raise the capital from the market capital. Another thing I wanted to point out at this junction, that although in the MSME clause, the force majeure clause is not there. The force majeure clause is that due to the unprecedented event, if anything happens, then it is not legally bound. So for an MSME perspective, although in your contract of the PO, although all the mature companies have mentioned in all their PO terms and condition the force majeure clause, but section 56, if we draw a reference from section 56 of the Indian Contract Act, which mentions the frustration of the contracts to be a situation where fulfilling a contract become impossible or unlawful after the execution of the contract. So, but so after this COVID-19, there would be numbers of the force majeure clause would be locked down in the various codes. But I personally suggest that before going into force majeure clause of each and every contract of the financial risk, if there is a mediation of the force majeure clause, it would be helpful to an organization rather than a litigation. This is what the various organization has already done with the rental. Like Future Group has already discussed the rental, renegotiate the rent plan for almost more than 1,500 stores in India. Now I will move to the cyber security. This is the second amount of the risk which each and every organization, although digitalizes or not, has to be taken into consideration. So what I said it earlier, I just wanted to reconnect. So India spends almost 3 hours and 48 minutes on a smart phone daily on a lockdown. This was published in Times of India, which they have taken in the third week of March of the lockdown, where if you see it, gaming app 44% up, 12.4%. So almost all the people are using this mobile applications. So huge amount of the risk that all the email ID has been into the mobile. So due to if you are aware of, there is a coronavirus tracker. Just click on this and the ransomware will occur, will depute it and will ask a ransom amount to unlock this phone. Because of the huge amount of the mobile spend, the organization has to first use an antivirus, various kind of the modus operandi they have to take into consideration. If you take into consideration like say a pay ATM, I will give you a recent example. If you have also installed an AnyDesk and pay ATM, then pay ATM won't work. Why? Because there is a remote location that another person can able to use this ATM app. So if your email ID is configured to your mobile, because there is a chance that the ransomware attack or it can indulge into an email network into an organization. So whether the proper channel has been taken into consideration, whether the IT personnel has taken into consideration this all kind of the risks. Now we'll move to the next slide to be much more. So cyber security, the rising expectation from an internal auditor. Cyber security was undoubtedly the perennial risk of the modern era. So what do you mean by this? It was the utmost a lasting or an existing for a long, and indefinitely it will be there for a next future generation. But the current scenario of the COVID has also led to the increased risk of work from home policy. This risk has to be examined whether the organization are sufficiently prepared to manage the cyber threats like disruption, financial, and the reputational harm. This all I will cover up in the next slide, how the financial reputational risk is there to an organization. What is the BOID policy, bring from home device policy? Like this, what I said it, a smartphone which you are using it configured to an email where email accounts can be hacked, since the usage of the smartphone in today's world has increased like anything. Recently, in the month of April, it was reported a large e-commerce company recently wrote a cybersecurity expert after an unexpected spike in the app downloads. So during this lockdown period, but it didn't convert into a consumer engagement. So what is that? Then e-commerce company like Amazon, Flipkart provides an advertisement in a Facebook or everybody, Facebook and other modes of the channel to download it. But that download of that Amazon or Flipkart app, just an example, after they download it, what the company noticed that this consumer, those that have downloaded, is not converted into a consumer engagement. So afterwards, they have engaged a cyber security expert where they found it that these are not the real consumers who have downloaded that application, but there were bots. This has resulted into a revenue loss on account of advertising fraud. So how an advertising fraud, I wanted to say, the Amazon or Flipkart company has to pay to an advertiser if the consumer click from there and download that application. So if it is a Facebook, I downloaded the Amazon app over there, so they have to pay to the Facebook, thereby forcing a company to pay to the website for the advertisement based on the number of the clicks that they attracted. This has resulted into a revenue amount of the loss. So this all kind of the scenario has to be taken into consideration because of the revenue loss. Now the second slide, I will be moving. The Arogyo Setu app, a much debatable in today's scenario, Arogyo Setu app. Now it is also called, it's not so healthy as per the personal privacy is concerned, because currently as per the newspapers, where it is a state surveillance which is used. I will give you an example. Since the purpose of the app, who has accessed the data, who will be accessing this Arogyo Setu app, was not clearly stated. So various privacy groups, and in today's also various lawyers has raised the privacy, and the Supreme Court notification of 2017 of the privacy, because from Friday onwards the government has implemented that this Arogya Setu app has to be mandatory downloaded by each, either by private or a public organization, has to be mandatory downloaded. Now, so what is the risk when compares to the another? Singapore has also developed the contact tracing app. It is called as a contact tracing app. So scientifically, it is not proven that this will reduce it, but in Singapore, they have clearly state the purpose of the concentration and when it would get deleted. So in all the Western countries, they use the Bluetooth device, but in India, along with the Bluetooth, they are also using the GPS location. So huge cry among the Indian public by the various privacy group expert has raised this concern. Today's only the government has able to clarify it. That is that today only the data will be used only for the medical intervention. Data of non-risk users will be deleted in 45 days and that of the risk patients in 60 days. The code of the application would also, till now the code for the app which has been used has not been disclosed to the internet, to the outside world. How much safe is this? And it has been also used in China, Korea and various other countries. Further, the telecommunication, what I said, a state surveillance which has been used. I will just move to further telecommunication like dot in sync with the states to track the patient, but officially clarified that the location of the calls were being used for the purpose. Location of the call details, understand, the location details of the call were being used for this purpose, which has raised the concern about the privacy and the state surveillance. So privacy expert says this has triggered one of the most important data privacy, which the telecommunication operator has not seek the permission to give access to the government. So Arogya Setu app, although it is now mandatory as per the national pending from 1st May, for all the organization has to be mandatory, use it, download it. Almost 80 million people in India has already downloaded this app, but the privacy concern is still aware from the government perspective, because recently one of the largest organization on yesterday's only there they have created a self-test symptom checker. Their security labs has been done because of the COVID-19. They have developed a self-test system checker. This was been done by the TechCrunch, and they have exposed the security labs has exposed the all the database where there was a with the internet without a password. Now there is also identity theft which has been done. If you see within a week after the PM Narendra Modi PM Cares Fund, dozen of the UPI ID was crop up like PM Cares. So the Home Minister CRT Cyber, the country security watchdog, has to be taken into consideration for stoppage of this identity theft. So this all the security risk, that is the identity theft. How you can able to identify fake vis-a-vis real. So the government has launched a fact checker. Like recently in Mumbai, if we say, you almost majority of the person, those who are as of now listening, have got that the Whips bread has been closed due to positive COVID baker. So everybody has stopped the Whips bread. But if you Google it, which the WhatsApp will be as already in the beta state is testing whether the forwarded message can be able to check it. This is what the government has done it through fact checker app. This is what the government. So always use a Twitter social media platform to be more authenticated rather than a WhatsApp, because the Twitter there is a blue icon which says that it is yes authenticated, and where you can able to believe it. Because in this scenario, if you forward the unauthenticated messages to somebody else, then as per the section 66A of the IT Act, you can be also been found to be indulged in the wrongful pass of the event. Now, so what are the questions which the internal auditor has to be considered? Like whether the are there is a sufficient evidence are there with the organization that they have got the basic cover. That is, I will say it, malware detection, patch updates, net, staff awareness training, insurance coverage of the cyber security risk, and access rights management. Is the organization aware of the changing profile of the cyber security risk, which I said it just now, the revenue loss of an e-commerce company because of the bots downloaded. So this was the revenue loss. Then is our public relation department is strong, that they can able to track the social media platform, which I said it earlier times, that in today's scenario you need to identify the social media. Is there is any wrongful message, is there is a public relation is been there, where they can able to identify the wrongful person or a wrongful means where the brands get a reputational risk is there or not, and they can able to clarify. So now we'll moving to the third party risk. Third party risk is the utmost major in today's scenario. Increasing reliance on the third parties by various organizations for various services, which I say finance, IT, payroll. Extra care has to be taken during this COVID-19 and also in future, because of the access of the data of the clients, since the infrastructure is different from an office and work from home model. To give you an example, finance function. If you are aware, there is a firm called My CFO, where they do it only the financial function of various organizations. So your data security of all the third party can, if your communication tools with the third party, if the communication tools with the third party like Zoom application, if you are aware of, you can also file transfers. So the communication tools and the data what you share with the third party is very important. whether I am able to keep reliance on them or not. If you are aware of the TCS, the major case study, Epic has claimed on TCS $420 million because of some of the employees who was not a consultant, but it portrayed to be a consultant. So portrayed to be consultant, some data was leaked. It's still in the almost in the court of US, but the third party. So you should also take a BGV clause, background verification check, for all the third parties for an important data security purpose. IT support function, cloud server. Now almost all the service industry are using the cloud server. So if you are aware of, there is a guidelines for a cloud server called as a consensus assessment initiative questionnaire. If you find it, you Google it, because since we as a chartered accountant are not so much subject knowledge with the IT, so there is guidelines of cloud data security, that they what are the parameters has been considered by the cloud. So you just need to you can Google it, you can find CISQ with AWFS has launched it prima facie on their own. What are the yes or no? So no, what are the security controls are no. You need to just figure it out and discuss with the management. So this would be helpful to an internal auditor perspective, since whether the cloud servers which are there, what are the security arrangement are there, and whether they are following this CISQ questionnaires, and if not, whether they can able to answer this. So you can able to identify the risk. You just have to figure it out, no, and you can able to identify the risk. So what are the questions which the internal auditor has to ask? How do the third party manages the data and the data security? Are the controls are of the same standard as per the organization, that is ISO 27001? And does the business review appropriateness of outsourcing? Is there a business review that they also outsource to the fourth party? Is the cost benefit analysis has been done? Is there an additional controls or work from home model, and audit trails are available? Since majority of the contracts would also include in-house, like BFSI sector and SEBI and IRDA says third party audit is to be mandatory. Although in BPM industry it is not mandatory for a third party, but financial sector the third party audit by the company is mandatory. So whether the third party can do in-house internal audit and continuous monitoring for the same. The next risk what I wanted to figure out of is the you can also do it, the third party risk. You can able to classify this during this time frame. You can classify all the critical vendors, monitor the third party along with the social media. Is there any data leaked by them? So you can able to identify. Now I will come on to the compliance and the regulatory risks. A variety of the regulatory directives are issued during this lockdown period by both the central government and the state government, and they are changing. That recently, just now in today's newspaper, it was said okay, even the shop can be open for non-essential. Earlier till Saturday, that is of 2nd of May, the Maharashtra government was saying it, that all the shop other than non-essential items has to be closed down. But recently, today they have U-turn that all the. So you need to be abreast with all the regulators. Are we able to do it? If the internal audit can help the organization by bucketing the regulatory requirement, like into an immediate, short term and medium term, and also considering the penalty provision for the same. To be more, what I said it, you need to be abreast with the various government guidelines, central government, state government guidelines for the general public, e-pass during the lockdown period. Various guidelines has been issued by the SEBI during this period, consultation of preferential issues, exemption for making an open offer for acquisition in the listed companies, having stress assessment. On 23rd of April, they notified the buyback of the regulation for easy funding of the listed company, where they are given a relaxation of up to 6 months. Now, what I say in near future term, the auditor has to bring notice to the management that in a section of the income tax 194N, which says this would be for a banking sector that the software has to be changed. If there was a provision earlier that if the threshold limit of 100 lakh, if there is more then the TDS would be applicable 1%. Now what they have said it in the government that this has been reduced from 1 lakh to 100 lakhs to 20 lakhs, and the bank has to identify that the person those who have not filed the return during this preceding financial year. So even in one financial year, if the or company or an individual has filed, the proprietary consultant has filed, then this would be not applicable. But if they have filed it, then the TDS rates is going to change it. So that software amendment has to be done. So whether the company has already done, you need to concern with the software vendor development during this period, because this would be applicable from 1st July 2020. Second would be the e-invoicing. Although it was going to be applicable from 1st April, now it will be implemented to 1st of October 2020. This would be applicable for the GST perspective. So the taxpayer having turnover of more than 500 crore in the previous financial year, and it is mandatory 100 crores, then it is optional to them. Now I would be moving it to the next slide. So what are the questions which we as an internal auditor, is the organization is responsive and taking a sufficient forward-looking approach to the regulatory changes which has been done? And does it follow a risk-based approach to the compliance? Has the organization learned from the previous past regulatory breaches, which I said recently yesterday, where due to the one of the topmost organization, that data of COVID-19 as a self-test symptom checker was being leaked in the internet. So whether this controls are being learned if there is any other organization has done this COVID test application. So does the business look at the past compliance breaches by the direct competitors, and whether the company is adjacent sector in order to avoid this kind of mistakes? Digitalization and business model. So this will be the future, each and every, which I said in impact of COVID-19, that every organization would become a digitalized organization facing digital and business model disruption. Organization facing significant disruption driven by escalating pace of the technology and growing ease of mass data collection. Although this cyber security data privacy protection bill was already there, it would be passed in the near future. Okay, so the data collection is very important, and the business model are getting disrupted. There is also a risk. So what I have an example which I have given it, where there is a risk due to the digitalization, like a doctor's app, if you are aware of, there is a doctor application is available online. So there would be a impact disruption to the general practice a nearby doctor. So there is a risk. Then Book My Show was also impacted during this lockdown period. So what they have done at Book My Show, since it was major business was of the theater, because of the theaters, the movies tickets application has been almost that film industry is losing more than 400 crores. So what they have done is live streaming of the performance activity. So these are the risks which the organization has faced, and they are able to cope up with the digitalization. Like rental from the office could be disrupted. So what this is the risk. So whether your office is already there, so can we make like WeWork model, like pay as per the OPEX model, what we say it, pay per seat, share mobility business, which was very well versed in Mumbai city, Go Cruise with what I say, shuttle app. So this due to the COVID, this all the risks which are there. So what the internal auditor has to do it, does the management know how the business and its sector are getting disrupted? Does the senior manager have the strategy in place to preempt or respond to this threat? This is what I said. If you are there of the strategy, you need to tell them what are the risks which are available. So generally we say internal has to be basically an internal. Now the definition of an internal should also be changed. Like internal which was earlier only to an internal. Now the internal auditor also has to bring outside knowledge to an internal, what is going on around the world, and this it can able to help to the management and raise a bar for an internal auditor. How is digitalization affecting the internal control environment? Like for an CA practice, like the institute has also given a guideline in December 2019, where all the CA firms can able to gauge what is the digitalization efficiency. So you need to all the CA firms, all the industry, how much you are more digitalizes, or is there is any scope for an improvement, and also another factors has to be taken into consideration. Now we will move to the business continuity risk, which I say. So this unprecedented event has already been happened. So earlier the business continuity management function was traditionally onus was on the CRO, CTO, or CSO for ensuring business continuity, which was on the based on the assumption that the essential service like cab and railway service would be available to the employees for movement within the state or intrastate during their contingency period. But now the whole definition of the business continuity management has been changed. Thereby, the business continuity planning should be in the right positioning by enabling all the different functions of an organization like HR, admin, IT to effectively coordinate during this crisis period. What would be the next recovery strategy? Are the organization, like in what I said in BPM industry, there is generally in a MSA, there is a client protocol which mentions that disallow transfer of work from home mode. So whether internet connectivity issues during work from home mode is there? Answer is yes. Non-availability of the IT infrastructure support during the remote working. So whether it is already available, there is a spare laptops because this was the refurbished laptop because of the China, the hardwares of the IT which were going to you not able to get the raw materials. Many of the sellers have to take the refurbishment of the IT hardware. So this could be also amounting to the risk, because formatting only does not mean it your data has been safe. So there is also a risk. So whether the BCP plan has been initiated to all the organization, so this you all have to be taken into consideration. So what is the questions which the internal auditor should ask or should prepare it? Whether the comprehensive BCP plan is in phase in such unprecedented event, whether this BCP plan can be tested in future, who is accountable to the various business continuity plan, are these managers are available? Because earlier what was happened, the BCP managers was there, but now in this scenario, the managers, those who have leave the organization, the company has not appointed another person who will be the BCP holder for this account hold. So this has to be taken into consideration, that whether the managers are available, what tasks they have to take in, whether the training has been given to them. So they also has to be abreast with the same. Does the business have educated PR communication, so that during this unprecedented event, who can able to coordinate with them? So what are the auditors can review during this period? HR, employee safety support measures, like including sanitation measures, insurance agreements for all the staff, not only for an organization but for the distributors. What the Airtel has done it, like the front line employee staff of the distributors, they all taken the insurance of the COVID-19. Aggressive messaging campaigns to the satisfaction of the employees that the organization is aware of their safety, so kindly come back, because in the as of now there is a labor workforce crunch in the country, where the employees don't wanted to come back to the organization. So they are giving this has been faced by the basically a pharmaceutical industries, where they are giving an additional revenue to come back to them. So what is the best measures to remind the employees their code of ethics or the corporate governance culture in their organization? Whether all the IT remote working are being getting updated, work from home, Wi-Fi's. because what it happens ke Wi-Fi for a top senior management, they are working from home, but the IT security person won't be aware that whether that work from home their Wi-Fi is being protected. Because generally what we do, the service account, what we say it is service account, the password remains by default the same, nobody changes. There was also, if you see, there was 8 biggest leakage which was happening in 2019, SBI and various other Just Dial app. So we are learning it from them, so we can able to abridge so that no malware or ransomware attacks can happen. Are the operation sales review strategies are being worked, are being properly, so during the time of the crisis how we can able to do it. Geopolitical instability, political risk has largely loomed in this wake of COVID-19, if you are aware of. Since the political landscape has increases, example, US has threatened to block the China telecom from the American markets, cites as the legal and security risk. More simple is that for the Zoom applications, right? There was a security lapse, which now nobody wanted to trust from the countries what they are with. US lawmakers have also called as a pandemic tariff on the Chinese goods. So what the government of India recently has done it to make a similar application of Zoom. They have invited, they will be giving almost a crore rupee those who can prepare an alternative work from home policy and also able to develop this kind of the app. And the department DPIIT is very much focused on providing this policies and procedure from the government perspective, so it can help to the management and to the industry at large. Questions which the internal auditor should think into view: is the business aware of how the political risks are affecting and its uniqueness into the operational footprint? Does the business have the monitoring system in place to identify the slow and the fast political economic risks and the need to take an action from them? Are the contingency plan and insurance policies are in place that in the event of the third party or the supply chain insolvency has happened? So what are the maybe another alternative solutions are been there? And the last is the human capital. Human capital, I say, has to balance both the expectation of the management as well as the employees. In today's scenario where the employee staff is not available and everybody wanted to go with respect to the digitalization, there is a shortage of the skill. Like there is no relevant software engineers programs are available. So what are the risks from the organization HR perspective? Employees don't turn back due to the health and safety issues. There was no digitalization of recruitment, on-job training, T&D programs to the employees, non-reviewing of the policies so as to facilitate work from home, no resource planning for the employees based on the hotspot location where the employee is there has done it. So what are the questions which an internal auditor has to take into consideration? How effective are the organization recruitment talent and is progressive? Are the business recruitment efforts addressing any skill gap? Is there? Is the business hiring the right talent and attracting enough to meet their long-term and medium-term and long-term strategies? What is the likely impact on the automation and digitalization of the workforce? Is there any skill gap, talent management, how they are upgrading their skills of the employees within the organization, since the outside new recruitment is not happening? So how they are doing a training and learning development program for all the, since there is a shift in the focus of the business plan. Like earlier there was a now the company also has to go to the digitalization mode. Earlier it was only on a offline. So this are all the questions which the internal auditor has to take into consideration. Okay, let's finish it up. Is there any questions? Hello. I have finished. If there is any questions.
Yeah, thank you, Bhavin. As the questions come in, he will present it to you. Mishra ji will present it to you. Okay. I would request the participants to put up their questions on the chat box. I also welcome CA Balkishan Agarwal, Regional Council Member from Surat. PK Bhai, thank you for joining us.
Thank you, sir. Thank you, Murtuza bhai. Thank you very much, sir.
So as Mishra ji puts up the questions, Bhavin, you can read the questions and answer them one by one. Yes. Now the glow behind you has reduced, so we can see a little of your face, but although it is still a lot more dark, but no worries. Yeah.
All the presentations are
Okay, so this question I will take. All the presentations are very good. Will the presentation slides be shared for reference? Yes. All presentation slides will be uploaded on WIRC website and along with the video recording, and the links are already like circulated on WhatsApp. We'll again circulate the link. They will all be available. Yes.
सर क्वेश्चन ऐसा है नहीं कोई सर.
Okay. Great. No problem then. Thank you very much, Mishra ji. And what we'll do is, Bhavin, an excellent session. You could cover lot of risk, lot of various areas in detail. I would now request Regional Council Member Balkishan Agarwal to give his few thoughts. Also, vote of thanks for this session and vote of thanks for the whole day, all the three speakers. BK bhai, over to you.
Thank you very much, Murtuza bhai, the Honorable Secretary of WIRC of ICI. First of all, thank you very much to all the speakers for today's webinar. All three speakers are very excellent. Starting from CA Vyomkesh Pathak, he has covered very nicely the subject Vivad Se Viswas scheme, and then CA Darshana Jain ma'am covering overview of external commercial borrowings very nicely, and CA Bhavin Parekh जो हमारे साथ है अभी. Sir, you have covered very nicely risk 2020. So we thank to all our speakers and all our members जो webinar के through हमसे जुड़े हुए हैं. And friends, it is rightly said, difficulties do not crush man, they make them. And I think it's a great opportunity for all of us to utilize this precious time fruitfully for knowledge upgradation and skill development. And our ICI and WIRC are doing best at their level, and any members have any suggestions, then they are always welcome. They can contact us, they can write us. And friends, this is the time for SWOT analysis with respect to our personal and professional lives. This is the time for sharpen our strength and overcome on our weaknesses. And I wish you all good time ahead, and stay home, stay protected. और जो कोरोना की वजह से थोड़ा दुनिया भर में जो थोड़ा डर का माहौल है, उसके लिए अभी 2 लाइनें मतलब मैंने एज ए फॉर्म ऑफ प्रेयर मैंने अभी देखी और लिखी थोड़ा, तो आई वांट टू शेयर विद देम. आओ ईश्वर से मिलकर आज कुछ मांगे, जिंदगी जीने की एक नई अदा मांगे. खुद के लिए तो बहुत मांगा है आज तक, आज सारे जग के लिए हम जिंदगी मांगे. आज सारे जग के लिए हम जिंदगी मांगे. थैंक यू मुर्तुजा भाई, भाविन भाई. ओवर टू मुर्तुजा भाई.
Very good. BK bhai, thank you. And very nice poetry, although small one with 4 lines, but too apt for the situation here. So for the participants, just a little information which I wanted to share. So like at WIRC, we have designed or we are in the process of finalizing 4 series. One is an internoid series, 4 days, 8 lecture of 1 hour each. One is a standard on auditing where we are trying to fit it 3 days and 6 speakers. One is on company law, 4 days, again 8 speakers, and one is international tax, 6 days, 12 speakers. So 4 series are getting worked out. But like this thing is like we can do only 5 event of 2 to 3 hours in 15 days. So it will have to go beyond either this thing, or we'll have to find out, like, if there are any branch who got a slot free and want to run this session, then the branch will have to do it. If we are working upon those, we'll come back to you by way of bulk mail, bulk SMS, WhatsApp. The messages will come to you. In fact, there was a meeting of CP Directorate today, and we have requested our Honorable Vice President to take up with the CP Directorate and see if the whole series can be clubbed as one event, so that we can do a lot more and we can bring so much more to the members. So with that, let me thank again Balkishan Bhai for joining us today, Bhavin for the excellent presentation and session, and to all the participants. On a minimum, on a day we are having 300, 350, 400, and yesterday we had 800. Today again, when we started, we had 500 types. So I am really grateful to all the participants for taking advantage of this series, and thank you. We are happy to close a call or meeting today. Thank you. Bhavin, I think you are on mute. You wanted to say something? You are on mute.
Thank you to everyone.
We can't.
Thank you.
Okay.
You, sir.
Thank you.
ऑडियो आ रहा है सर अभी? बोलिए आप।
ऑडियो। हाँ
हाँ भाई
हेलो।
हो गया आपका। भाई अपडेट कर दीजिए। हाँ हाँ उनको तो लिंक गया रहेगा शायद से। सर अभी आप अपना पीपीटी शेयर करने का देखिए ऑप्शन आएगा आपको।
सॉरी
सर आप अपना पीपीटी शेयर करिए ना सर, आपको देखो मैसेज आएगा।
पीपीटी शेयर करूँ ना मैं? 1 मिनट।
आपको मैसेज आया देखिए सर। शो माय स्क्रीन करके आ रहेगा ना सर आपको।
शो माय स्क्रीन। हाँ
हाँ अभी आप इसको विंडो डी दबा दीजिए सर, इसको मिनिमाइज कर दीजिए, विंडो डी दबा दीजिए।
इसको मिनिमाइज कर दूं?
चलेगा, कर दीजिए।
अभी शो माय स्क्रीन में मैं जाके वो खोलूं क्या एक बार?
सर नहीं, आपका लैपटॉप आ गया मेरे पास में। अभी आप है ना इसको पूरा जो आपका जो खुला हुआ है सब मिनिमाइज कर दीजिए, या आपका पीपीटी डायरेक्ट ऑन कर दीजिए, जो पीपीटी आपका
पीपीटी
ऑन
ऑन
कर
करता
दीजिए।
हूँ। हाँ कर रहा हूँ। चलो एक पीपीटी ऑन किया मैंने अपनी।
एक स्लाइड पर आप बोलेंगे सर देख लो।
ये ऑन किया मैंने पीपीटी। अभी दिख रहा है आपको?
हाँ दिख रहा है सर। कोविड-19 है, WIRC वेबिनार 5 मई 2020।
हाँ बराबर। स्क्रीन चेंज कर रहा हूँ।
हाँ नहीं, थोड़ा सा एक टॉपिक पढ़ेंगे तो आपका आवाज मुझे मालूम पड़ जाएगा।
अच्छा तो भाई अभी मैं पढ़ रहा हूँ ये व्हाट वी आर कवरिंग, सेटिंग कॉन्टेक्स्ट, चैलेंजेस, अपॉर्चुनिटीज, यूज ऑफ टेक्नोलॉजी, प्रैक्टिकल टिप्स, हाउ टू स्टे
सर आप
रेलेवेंट
हेडफोन
एंड
लगा लीजिए
एडवोकेट,
सर एक बार। हेलो
लर्निंग्स फ्रॉम कोविड। हाँ आवाज आ रहा है?
सर, हेडफोन हाँ आवाज आ रहा है सर। हेडफोन लगा लेंगे तो थोड़ा अच्छा आएगा साउंड से।
1 मिनट में हेडफोन लगा रहा हूँ, रुको।
अरे भाई ये फोटो आपने जो
अभी बेटर है आवाज?
हाँ सर।
ये आवाज बेटर है?
हाँ सर ओके सर ओके। हाँ भाई बोलो।
अभी हेडफोन्स पे ठीक है क्या?
हेडफोन से ओके है सर, हेडफोन से ओके आपका साउंड सर।
साउंड क्लियर है, लेकिन फिर आपका साउंड लेकिन डायरेक्टली बाहर ही जा रहा है ना, वो हेडफोन्स में नहीं आ रहा है आपका साउंड।
सर आपने हेडफोन क्लिक नहीं किया है, आपका हेडफोन में बोलने के लिए आपने डाला है मगर हेडफोन नहीं लिया है, इसलिए आपका साउंड बाहर आ रहा है।
तो इसको क्या करूं मैं?
सिलेक्ट करिए ना भाई, मैं आपको
हाँ
फोन करता हूँ सुबह से। तो बोल रहा हूँ कि जो आपने पिन डाला ना सर अभी
हाँ
लैपटॉप में पिन डाला ना, तो सर एक ऑप्शन आता रहेगा एकदम नीचे, वो आप उसको क्लिक करिए ना सर।
पीपीटी को करूंगा पहले एक बार।
हाँ पीपीटी मिनिमाइज कर हटा दीजिए। अभी आप पिन डाले ना, आपने पिन डालिए, आप
हाँ
लैपटॉप का पिन निकालिए।
निकाला
हाँ पिन
और
डालिए अभी।
डाला। डाला। व्यू
कोई
ऑडियो
मैसेज
ऑप्शन
आया
में
आपको?
जाओ।
हाँ
मैसेज तो नहीं आया। व्यू ऑडियो ऑप्शंस में
क्लिक मारिए, इसको दीजिए मुझे, दीजिए ऑप्शन दीजिए मुझे।
हाँ
हाँ इसमें क्लिक किया मैंने।
हाँ
सर अभी मेरा आवाज आ रहा है आपको? हेलो,
हेलो।
आ रहा है मेरा साउंड अभी?
हाँ, अभी आपका आवाज बहुत लो हो गया है।
हाँ, अभी
बोलिए।
अभी आ रहा है?
अभी भी हाँ आवाज आ रहा है, लेकिन डायरेक्ट लैपटॉप स्पीकर से आ रहा है। मेरे आईपैड में सेटिंग स्पीकर का अच्छा है, आईपैड से करूँ 1 मिनट?
चलेगा, 2 मिनट रुक जाओ, इसमें देख लेता हूँ मैं।
क्योंकि नॉर्मली मैं ऑफिस का वो आईपैड से करता हूँ ना, तो वो एयरपोर्ट से ज्यादा प्रॉब्लम नहीं आता है।
नहीं, आपका हेडफोन का पोर्ट यहाँ पे हेडफोन लेना चाहिए, नहीं ले रहे हैं। चलेगा सर, आप उसमें आ जाइए।
आईपैड पे आऊँ?
हाँ हाँ, उसमें आ जाइए।
मैं आईपैड से लॉगिन करता हूँ, 2 मिनट दो।
चलेगा चलेगा।
लॉगआउट करना पड़ेगा ना? आईपैड पे वो मेरे को वो साइन इन के लिए पूछ रहा है।
हाँ सर, करिए।
साइन इन करूँ?
करिए।
या वेबिनार आईडी मिलता है क्या इसमें?
आईडी ले लिए 561
561
705
705
019।
019। ओके।
आ गए सर आपने?
हाँ बस 2 ही सेकंड, आ ही रहा है। देखो कनेक्ट टू ऑडियो आया मेरे को, हाँ अभी आया, देखो
क्या नाम रखा है आपने उसमें?
प्रशांत, दिख रहा है आपको?
हाँ चलो, यहाँ पे भी आ गया आपने। तो पहले वाला डिस्कनेक्ट करना पड़ेगा ना मुझे?
ठीक है ये।
सर पहले वाला बंद कर दीजिए ना सर। और इसका माइक ऑन करिए।
अभी देखिए,
पीपीटी शेयर करिए।
मेरे को प्रेजेंटर से निकाल दिया क्या?
वापस ले रहा हूँ। हाँ लिया।
लिया ना, रुको मैं कर रहा हूँ। फाइल शेयर करना है। अभी मैंने ऐसे एक दूसरा एक शेयर किया है।
चलेगा चलेगा।
पीपीटी मेरे को सेव करना पड़ेगा आईपैड में, इसके लिए।
चले, कुछ भी आप एक बार अपना डेस्कटॉप से शेयर कर दीजिए ना, और कैमरा शेयर कर दीजिए एक बार अपना।
कैमरा
मैसेज
चल रहा है नहीं अभी?
देखो
कैमरा,
मैसेज भेजा मैंने।
टैप टू शेयर योर स्क्रीन, देखिए अभी ये।
ओके ओके। और आप स्क्रीन शेयर कर, अपना कैमरा शेयर करिए।
अभी
मैसेज देखो आया आपको?
शेयर माय वेबकैम।
करिए। हाँ आ गया। अभी एक टॉपिक पे बोलिए एक बार।
Exposure draft, guidance note on company's order 2020.
ओके।
Your comments on this exposure draft should reach us by 18th March 2020. Comments are most helpful if they indicate the specific paragraph to which they relate, contain a clear rationale, and where applicable provide suggestion. ये वॉइस क्लियर है?
ओके सर।
ओके है ना? तो व्हाट वाज बेटर, ये कंप्यूटर से करना ठीक है कि इससे करना ठीक है? क्या लगता है आपको?
उस पे थोड़ा, उस पे अगर हेडफोन पकड़ लेता है तो अच्छा है, ये भी अच्छा ही है। आपको मैं
तो
अभी
उधर हेडफोन नहीं पकड़ रहा है ना?
हाँ तो फिर आप इसी पे डाल दीजिए।
क्योंकि उधर पता नहीं हेडफोन क्यों पकड़ नहीं रहा है, क्योंकि आपका वॉइस बाहर इधर से नॉर्मल स्पीकर से आ रहा है।
चलेगा सर, इसको रखिए फिर।
इधर तो इधर टू वे कम्युनिकेशन ठीक चल रहा है, बराबर है? ओके, तो आवाज क्लियर है। और यहाँ पे मेरे को दूसरा कुछ कंट्रोल करना पड़ेगा क्या?
और क्या चाहिए आपको बताइए।
नहीं, और क्या रहता है मेरे को इसमें? क्वेश्चन आंसर होएगा तो कैसे पता चलेगा?
आप फर्स्ट स्पीकर है, सेकंड स्पीकर है आप? आपका टाइम क्या है? टाइमिंग क्या आपका?
2 बजे का है ना?
2 बजे का है। अब 2 टॉपिक आपका नहीं, तो एक काम करिए ना सर, जो भी 5 या 6 क्वेश्चन में दिखा दूंगा मैं आपको।
2 बजे का है ना मेरा?
हाँ 2 बजे का है
तो कल,
आपका, तो मैं आपको ना जो जितना क्वेश्चन आया रहेगा ना सर, उतना क्वेश्चन मैं
हाँ
आपको 2 दे दिखा दूंगा। और कैसे दिखाऊंगा ये देखिए, मैं आपको यहाँ पे जाता हूँ। अभी मैं आपको
हाँ
शेयर स्क्रीन करता हूँ मैं। देखिए मेरा आपको स्क्रीन शेयर दिखता होगा। तो ये
हाँ,
देखिए
दिखा।
जो क्वेश्चन आया रहेगा, अभी देखिए क्वेश्चन आया था, जितना भी क्वेश्चन मेरा अभी मीटिंग में आया था वो मैंने पब्लिक को
हाँ,
दिखाया था। तो ये क्वेश्चन आया था, तो मैं ऐसा आपको क्वेश्चन कॉपी मार के मैं दे दूंगा आपको।
अच्छा, आप ऐसे दोगे
ओके।
मेरे को?
ओके सर।
ओके ओके, ठीक है।
ऐसा क्वेश्चन क्योंकि ज्यादा, क्योंकि अपने पास टाइम नहीं रहेगा ना ज्यादा, तो सर 5-6 क्वेश्चन जो भी रहेगा मैं आपको दिखा दूंगा।
ओके ठीक है। तो ये कितने बजे कल
चलेगा
कल
सर?
अपन कनेक्ट करेंगे?
मैं आपको 1:30 में चालू करता हूँ, मैं 1:30 चालू कर दूंगा मैं।
तो ठीक है, मैं 1:30 मेरे को बोलिए, मैं
ओके
1:30 रेडी
सर।
रहूंगा। ओके,
बाय सर।
बाय, थैंक यू। बोल ना पण तू सुशांत.